good afternoon, and good evening to the rest of you. Welcome to another episode of Bitcoin Magazine Live. I'm your host, Q, coming to you yet again from my mother's basement. It is Thursday, July 14th. We have a jam-packed episode today. We have news and notes. We've got an interview with JP Baric, and we have an interview with Jimmy Song. How's it going, P?
As always, it is going fantastically. I'm wearing my suit jacket today, so you can tell that I'm in serious mode, and excited to get into it. Let's hit it.
Let's dive right into news and notes. And there's been a lot of rumblings about some companies we've been reporting on. Both Voyager and now Celsius have filed for Chapter 11 bankruptcy. Let's start with the sinking ship that is Voyager. Chris, I think you have some more details you want to come on over and share with us.
Get on camera.
What's up, guys? How's it going? Yeah.
Quite well.
So basically, last night, Voyager and Celsius filed, or they're filing for Chapter 11 bankruptcy. Basically, what this means is they are trying to, obviously, their assets or their liabilities are much higher than their assets, and they're trying to consolidate all of those things to pay off the liabilities. It was noted that they should actually be filing as SIPA, which stands for Securities Investor Protection Act bankruptcy, is the form of it. Basically, what this means is the assets of the clients would remain as in their own name. So, for example, let's just say you're using Fidelity, which is a brokerage like Legacy for buying stocks or bonds or whatever. If Fidelity were to go out of business, but you've been using your 401k to buy stocks of Apple or Google or Microsoft or whatever, or even just an index fund, if they were to file bankruptcy, they would remain in your name under SIPA laws, and it would not go towards basically Fidelity when they're starting to liquidate assets. They can't just sell your stock portfolio, your 401k, in order to cover those liabilities. It would remain in the investor's name. So basically what would happen is when they're going through the refiling, your assets would be picked up by another firm, whether it's Goldman or whoever, basically when they get reorganized. Celsius and Voyager are both trying to file Chapter 11, which would mean that the client's assets in turn become their own assets, meaning that, obviously Celsius and Voyager both stopped allowing their clients to withdraw their funds from their platforms, and they're trying to go through bankruptcy proceedings in order to basically use those assets to cover liabilities. So basically it screws the investor. I think this act came out in the 30s or 40s, and in order to protect investors from fraudulent companies taking people's money, saying, oh, yeah, no problem, dog, we're buying stocks, bonds, all these awesome things, and then really just running a Ponzi scheme out the back door. So basically that's what it is. Right now, a judge has already talked on the Voyager bankruptcy and said that he's trying to block them listing as Chapter 11 bankruptcy, like I said, and forcing them to do the SIPA route, which would protect investors. It's going to probably take a while for sure for this to unravel, but that's just basically the too long didn't read for everything that's going on right now for both those platforms. QP, you guys, anything to comment there?
I mean, I go back to the idea that there's no CEO of Bitcoin, there's no business entity behind it that's going to turn around and say, oh, we declare bankruptcy. Whatever technicality or the nuances of bankruptcy that happens beyond that. But I love the fact that SIPA literally stands for security, like the S stands for security. So I'm curious if this will in turn be used, like these rulings may be used by government agencies like the SEC to turn around and say, well, Celsius was now deemed a security. So what other shit coins are we going to categorize, or I guess they'll say digital currencies to be all proper and shitty about it. But I do think this can open the door for all of these other tokens to be looked at as securities. It'll be very interesting. I mean, these are not unexpected rulings. These are not unexpected moves by either company. And it will be interesting to see how government officials play these out under the jurisdictions and rules that are in place, not for digital finance, but rather just normal, I don't want to say normal, but traditional financial institutions, and how this new age of digital finance is going to be either adopted into or blended into in some way through the regulations that are already in place.
Yeah, I mean, I won't pretend to be fully up to speed on either of the details of these stories, but depending on what is in the the terms and conditions associated with Voyager and also Celsius, I think you're right, Q, when you say that this may have other knockdown effects on the tokens that are associated with those platforms or the other shitcoins. But there are a lot of people who put Bitcoin into these platforms, and they're going to learn the super hard lesson: not your keys, not your coin. Because my understanding is that by declaring Chapter 11 bankruptcy, and again, this may already be covered in the terms and services, but that basically many people are surprised to learn that the Bitcoin that they put on these platforms is not actually theirs. It's basically owned by this entity that is now declaring bankruptcy. And so potentially, if they get their way, they will all just be seized as part of the bankruptcy filings, which seems crazy on its face to me.
Yeah, and even they're just basically they've done a lot of things to flip flop between being a brokerage versus being a platform versus being like an actual company, a physical company that can file Chapter 11 bankruptcy. Like one of them is they say that they're FDIC insured for when people put their money on their platforms, which isn't true when you look at the fine print. So basically, what Celsius and Voyager are doing is they're a platform or a middleman between them and a bank. So it's you, the customer, Celsius or Voyage, and then the bank that they're custodying with. So if the bank goes out of business, you would be guaranteed up to $250,000 that they were there. That does not include that you're FDIC insured if Celsius or Voyage goes out of business. But then it gets very interesting in exactly what P and Q you were both mentioning, that if these are listed as securities, technically, like, they should be filing under the SIPA Act. Chapter 11 bankruptcy is specifically for companies. I don't want to broadly say this, but basically companies that produce something, or like if let's just say you're a manufacturer of cars, like you have assets of the cars that you can manufacture, the buildings that you own, the buildings that you rent. All of those are your assets and your liabilities that can be sold off to other businesses. It's very different when you're getting into financial markets, that basically you're talking about securities. You're custodying a client's assets in their name, and whether you're taking a fee or however you have it structured, that's very different. It's their assets that you are helping them protect. So it gets a very nuanced with financial markets, or financial instruments is kind of what they're delving with. But P, to your point, a lot of people are going to find out that they were uninsured creditors. They were not actually securities that they were holding. So it gets very nuanced, but the lawyer was already talking up, or the judge was already bringing up, that on Voyager's platform specifically, I didn't look into Celsius's, but I know in Voyager, it literally said your assets on their platform. So it's like, if you're claiming that it's your client's assets, then you can't in the back end say, oh no, now these are our assets. So it gets very like gray with like the wording of how they said things. You obviously have to dig into the term sheets, but that's what the judge was blocking. He's like, you say on your platform, it says your assets, meaning the client, meaning not your assets as in Voyager or Celsius. So it is very legal speak and lawyer speak, but the judge was already blocking a lot of things that they were trying to claim when they're filing Chapter 11.
To Q's point, the SIPC protects investors up to $500,000 in cash and securities, but in securities. And Bitcoin is specifically and explicitly not a security. It is a commodity. So under the SIPC, it wouldn't be covered anyway.
Yeah, but
maybe there's a Voyager token too.
No. Again, I'm talking specifically about Bitcoin.
Yes.
I mean, at this point, this is why I kind of said this is going to, however these court rulings are played out, this will now be a template for a lot of other businesses to start to have to pay attention to and like figure out how they're held liable and what they are in theory liable for. I mean, to help really paint a picture of what Chris is explaining about member banks versus like a banking institution sort of banking these entities. Like if anyone else uses Strike the way I do, whenever I send money to my Strike account on my bank statement, it doesn't say Strike. It says Prime Trust LLC, and that's the banking entity that I believe also covers Swan, also covers like numerous other cryptocurrency and Bitcoin only platforms. So
the term is
that specifically, that Prime Trust LLC, that is the bank that's FDIC insured, not something like Swan, not something like Strike. Although I don't use Swan candidly. Strike doesn't tell me anything's FDIC insured. So I just think it's funny that it's not funny because it's really sad that a lot of people lost a lot of money in this process, but this is a clear sign to me that if people are citing, wait, it said FDIC insured though, like what's going on? I was like, you don't even know what FDIC insurance means. Like you've heard that phrase on a few commercials for E-Trade when you were just watching a sports game and you're like, oh, we're good. Like E-Trade says that too. But this is a lot of people who didn't know a whole lot about money getting wrecked. And this is an opportunity to learn and grow. And unfortunately, though, I think human ignorance is going to lead us to having a different version of this in the next bull bear run. And I just urge everyone to like take the time to just go down the rabbit hole of what is money. Like just define that, not what is Bitcoin, not what is crypto, not what is DeFi, just what is money. And when you start to understand that, you kind of poke holes in a lot of these like, oh, we'll give you 8% yield. Come on over. Yeah. We just print money. Yeah. So I don't know. That was my little ramble.
Yeah, I mean, there's a lot of nuance. There's a lot of things. Again, I do not pretend to be an expert on this, but as I understand it, and I don't know about Voyager, but Celsius explicitly says in their terms of service, as I understand it, as I've been told, that these things are that your assets are their assets in the event of some kind of financial collapse, and whether or not this is SIPC insured or FDIC insured doesn't actually matter, because at the end of the day, the only thing we care about is fucking Bitcoin. And if you don't control your own private keys, you do not actually own Bitcoin, and you are going to eventually get rugged. So this is just another step in that process. Like, so for me, I'm like, this is so sad. I think I said this before, but I went into one of the Celsius like cope rooms, right? Every time Celsius, makes this big announcement, or Voyager in this case, there's these like Twitter spaces that spin up with, hundreds, if not thousands of people who are just all in there like, no, I believe in this person. I believe in Machinsky. And I go in intending to like, kind of like rabble rouse and be like, oh, like buy Bitcoin. And I end up just being like, oh my God, this is so fucking sad, because these people are real people. They're just like humans who are trying to understand like what the fuck happened. And the answer is, if you don't hold your private keys, you just hold an IOU and you're going to get rugged eventually. So learn how to take custody of your Bitcoin safely. And as you are ready to, don't just do it because we're talking about it here, but go and, read through some of the tutorials. There are fantastic videos about how to do this, because you can also lose your Bitcoin if you just like, take it off the exchange and fuck it up. So don't do that, but go through the process, take control of your financial future, own your own private keys.
Yeah, and I'll add one more thing to basically what Q was saying earlier with FDIC insurance. Like, people don't even know what that means. If your bank were to fail, and what's the government going to have to do to make you FDIC insured whole? They're going to have to print a ton more money in order to cover all the people that lost all of the credits or the money that was in their bank accounts. So this is just an easy way for the government to print more money. And if a bunch of banks are going through FDIC and proceedings, the economy is not in a good state of the place of if like that is going on for sure. I guess P, I wanted to bring up and kind of nuancing something that we've talked about in the past, and you're probably the best to talk about this. So in a hyper Bitcoinized future, how in a way, like let's just say a business wants to provide a service for me and I want to give them my Bitcoin, but I don't want the risk of giving them the Bitcoin now. Is there something like cool nuanced way of like doing a discrete law contract of like, after 5 years of service of X, Y, and Z, if you meet all these things, I send you my Bitcoin or half of the Bitcoin, or, maybe I pay like 100 sats up front, and then at the end I pay 1,000 sats if you like meet all the terms of it. I know that kind of gets into the Oracle problem, but are there cool ways to make a contractual agreement where like I hold the Bitcoin, but like you as a company are providing value to me and I like send it to you over time? I don't know. This is just very hypothetical, and I don't know if
sounds like a normal. It honestly sounds like you complicated a very normal contract that you could just denominate in dollar terms and say, hey, I will pay you X number of dollars over the course of a bi-monthly payment structure based on these. Like,
but
to be honest,
that's assuming dollars are still there. Like, think about it without dollars. I guess you could just do it in like a sat stream of like, oh, every month I pay you 10 sats or whatever it is.
I understand that, but like you're trying to claim that the future value of Bitcoin will go up. And if you did that last year, like you would look like a complete buffoon. So instead, unfortunately, for the time being, you do have to tie it to the dollar.
Some people
In
do that
my
with homes,
opinion, at
though.
least.
People do that with homes over 30-year for a mortgage. Like they're they're trying to claim that their house is going to go up in value or at least remain the same. That's the contract when you lock in. You assume.
I
For
mean,
all of
look,
you who did that, just wait for the next 12 months.
I mean, look, you
Rude
can.
fucking awakening.
Q is trying to move out of his mom's basement.
He hasn't
Let me
made it
just say,
yet. So
I
take
literally
everything that
marked a
Q
bunch
says
of
with a
neighborhoods.
giant chunk of rock salt because he is still living with his parents. So, I mean, look, like hash time lock contracts are something that we use in the Lightning Network in order to basically lock up funds for a specific number of blocks. So I believe that there's some way that you could do this, but I think that would kind of that might defeat the purpose of what these things are, right? Like I think the closest thing we currently have is something like Unchained Capital, where you have a 2 of 3 multi-sig, where you control one of the keys, they control one of the keys, and then I think the person that you are loaning your Bitcoin to controls one of the keys. And so basically, you can still see what is happening to your funds, but the 2 of those 3 parties, Unchained Capital and the person you're loaning the Bitcoin to, can collaborate to sort of move the Bitcoin as needed. So I'm not actually sure. It's a good question, Chris, but I believe it would be technically possible. I'm just not sure how it would work in terms of a traditional financial instrument.
Yeah, I think that's all good. Do you guys want to move on to the next story, or Q? Did you have
Wait,
something?
So on the idea of like, people needing to really read and understand the terms and conditions, my mind went to the episode of South Park where like people aren't reading the Apple's terms and conditions, and then all of a sudden people are like, oh shit, we're actually supposed to like do this thing. And so just doesn't let me share my fucking screen. Chris, you broke Restream. All right. Everyone should go watch the episode of South Park that's called Terms and Conditions, because like this is like, honestly, it pokes fun at the idea of you don't really know what you're signing up for. And like, let's be honest, none of you have ever read the Apple terms and conditions, but like when you're putting thousands upon thousands of dollars into some random website that was just started maybe 5 years ago, probably do a little bit more due diligence. Also, none of this is financial advice. Do your own due diligence. If you're listening to 3 bozos talking to themselves on the internet and base all of your financial decisions off of that, you're a fucking idiot. Okay, now we can go to the next. Or here, Chris, I'll send you this link. Although I don't know.
Let's keep going. Let's keep it moving.
It'll actually work because it was like a weird screenshot thing. But we'll go to the next story. Quite possibly the lamest story in my opinion. First off, go Red Sox. The Yankees fucking suck. NYDIG is going to partner with the New York Yankees for Bitcoin benefits and give Yankees players, personnel, employees the opportunity to take a part of their salary in Bitcoin. A huge step in the right direction, just with the wrong fucking team.
As a diehard Mets fan, I completely agree with Q here. Let's go Mets. I don't agree with Steve Cohen saying it's blockchain, not Bitcoin, but that's for another debate. But I think it is pretty iconic that one of the most well-known teams in the world, I mean, I'd put them up with the likes of Barcelona, Real Madrid, many of the other teams that are internationally recognized, that it's a step in the right direction, that they made it a point to partner with NYDIG and specifically do Bitcoin. It wasn't a crypto thing. Where IQ, you can speak to this. You've seen a lot of teams in like South American countries or even just teams in the UK partner with crypto sponsors for soccer teams. And, I'd say that's a step in the wrong direction. So it's interesting that a team such as the Yankees are doing this. I think other teams will follow suit, but remains to be seen.
I mean, look, I refuse to call Staples Center anything other than Staples Center. Like it will never be crypto.com arena, no matter how much money gets spent over there. Coinbase had signage all over the NBA all season long. I don't necessarily think these are bad for Bitcoin, though. I think, unfortunately, people will be sent down the wrong path and maybe look at or pay attention to the wrong things. However, it still opens the door. It starts the conversation. And that's ultimately what all of these marketing divisions are tasked to doing. It's start a conversation, be the top of the funnel to hopefully bring in new customers and new clients. I think personally where my line has really turned into is like, if it's a fucking token, like Voyager had a fucking car in NASCAR last season. That blows my fucking mind. And nothing more than the fact that Voyager offers a token. Like,
Celsius does as well.
Celsius does as well, but like to my knowledge at least, they don't really have any like big marketing, especially not like in the sports realm. I want to say XRP does. And it's like, see, that is a red flag to me. The most beautiful thing, in my opinion, is the Bitcoin racing team, because especially in the sport of NASCAR and IndyCar racing, like so much of the money has just come from sponsor dollars. And this is not like Bitcoin doesn't have a CEO. Bitcoin doesn't have a marketing team. These are some very passionate Bitcoiners who believe in financial freedom and want to have people start to see the word Bitcoin more and more normalized, so that it's not just like some crazy like internet fad, or it's not like that thing that this guy I went to high school with bought a bunch of and now he's rich, but like how the fuck is he rich and I'm still working my 9 to 5? Like we're trying to break that. And I go back to saying all press is good press, man. Except for Voyager. Voyager's a fucking joke. I cannot believe they had a car in NASCAR last year.
I don't know, man. I don't know why the car is so significant. I mean, there was a Twitter space where I was talking with Chinsky and was like, why the fuck do you have a token? And he just kept repeating, do you want more or less? And wouldn't answer the question. And I think it's all just fucking ridiculous. He also claimed, he was like, I'm basically Satoshi Nakamoto. Like, I have a large reserve asset. I own a bunch of the tokens and I will never release it onto the market. So, you know, it's the same thing.
I know there was rumors that he was potentially fleeing the country. Whether that was true or not, I won't pontificate. But
Dude, he got
was,
caught trying to fly to Israel.
Yeah,
wait,
that's
recently?
wild. Yeah, like a
Yes,
couple
like 2
weeks
weeks
ago.
ago.
Oh, shit.
Yeah, like
Oh,
the
dude.
FBI or someone basically custodied him to prevent him from getting on the flight.
I like saw that and I needed to do some
They
due
custody
diligence.
him.
So someone like I posted about it on Twitter and
Custody your
someone was like,
Bitcoin and custody your scammers.
well, so someone was like trying to defend him because he was like, but like Israel has like, there's like he can still get sent back to the US if there was trial. Yes, except for the fact that he's also an Israeli citizen and they're probably not actually going to send their own citizen back to come to jail over here. So like you're not running away if you didn't do something wrong. Did I say that right? I don't think I said that right. But like the point I'm trying to make is you're not running away if you did. I'm going to run away if I did
there's
something
no
wrong.
reason to run away if you're innocent.
Thank you. Geez, like I love double negatives. It's fun to confuse people, but sometimes I confuse myself a little too much. But yeah, Yankees suck. Go Red Sox. Billionaire Thomas Petterfee says inflation will Petterfee. Well, inflation will last for years and Bitcoin may become worthless. So let's unpack this a little bit. Let's start with the first. Inflation will last for years. I like, you know, all of us armchair economist experts over here. I think we all have said inflation is going to be a problem for some time. I wrote articles about this 2 years ago saying this doesn't make sense. You can't just print money and like expect things to be fine. Well, we're starting to see the repercussions of that. But the truth is, I'm gonna say it like this. If Jim Cramer says this is the top of inflation, this might actually be a 9.1 reading, might actually be something that we pray for one day in the very near future. Like it's a scary thought to believe, but you know, Jim Cramer's kiss of death kind of cements that theory in my mind. I do weirdly agree with inflation is going to be a problem for years. How does it be a problem for years? Well, if the Fed continues to just say, hey, we're going to reverse it, we're going to pump liquidity into the market in 6 months' time, and they do that for what, 6, 9, maybe 12 months after that. So we're talking an 18-month from now runway where in 6 months they shift. For the next 12 months, they pump liquidity. And then what are they going to do on the tail end of that? Oh, well, we actually have to stop doing that. So we're going to take liquidity out. We're going to raise interest rates just like what you're seeing now. And well, just like what you're seeing now, when they raise rates, they decrease the liquidity they're pumping into the market. All of a sudden, boom, the economy looks bad. Inflation starts going up. You're just going to rinse and repeat the cycle. What I'm genuinely afraid of is, fine, pump liquidity back into the markets. You'll drastically force prices in like maybe the short term to go lower by triggering this recession that we're about to get. Maybe. I don't buy it, but maybe. All you are inevitably doing by reintroducing more and more liquidity to the market is further increasing prices, further exacerbating inflation. So I actually do agree with part one of his statement. I don't know if either of you guys agree with that or disagree.
P, you want to talk on it?
No, man, you first.
I think the first part of his statement saying that inflation may last for years, I think I agree with that. That like things may get out of hand. I think I don't want to say we've come to the end of the rope, but when you're pegging interest rates to zero and now we're trying to raise it and things are breaking, either they're going to have to print more money to cover the debts and serve it. Like, I'm not just talking about companies, I'm talking about the United States. Like, the United States does not want to default on their debts. It's very bad for the global economy, very bad for the US. Like, Q makes a good point. They don't really care, but they have to make it look like we're going to print more money
Like,
to cover our debts.
who's gonna really come knocking on the White House door if the Fed just says, hey, like, we're not paying this list of like all the bonds dated starting from this date to this date. We're sorry, we're not making any payments on those anymore. Like, realistically, like, who's gonna come collect?
Yeah.
You're gonna send your big bruiser to break someone's thumbs? Like, come on.
Yeah. Bitcoin becoming worthless, though. I think Bitcoin I know the narrative
Wait. Let P comment on inflation and then let's go to the Bitcoin.
All
right. I mean, I have to tie them both together. So, I mean, fuck this guy. He's basically just telling everybody what we as Bitcoiners already know. Like, yes, inflation is a big fucking deal. We printed 80% of all the US dollars that have ever been printed in the history of this country in the last fucking, since 2008. And, so he's basically just sort of being like, hey, look, this thing that's happening, it's a thing. And then he's tacking on Bitcoin because he has no idea what he's talking about. So Bitcoin is not going to go to zero. Absolutely not. Like, those things are not connected at all.
So this is an interesting one. And to be honest, I just need to like recreate this chart and actually post it. There is a very strong correlation. I believe it was at 91 or 92, 0.91 or 0.92 between the M2 money supply and the S&P 500. But there is weirdly also a very high correlation above 90% between the M2 money supply and Bitcoin. So I actually think in a weird way, like it's, I fully believe I will not die seeing the US dollar go away. I will root for it until my last fucking breath. But I actually think because of that reason, Bitcoin will last forever. Truly, because the dollar will be like this zombie currency being pumped back up to like, oh, now a dollar's worth 1 cent. I'm saying words that really don't make sense, and I understand that. So fuck off to anyone who feels like correcting me.
Thank you for acknowledging
that. But every single time we try to pump up the dollar, try to make our economy seem better, all that's going to happen is Bitcoin is going to get stronger and stronger and stronger. Whether that means its price goes to $1 million a coin or what, doesn't really matter. It itself, the network, the technology, and the use cases become stronger and stronger. Yeah. So his first part of his statement negates the second part of his statement, in my opinion.
Yeah, I guess I'll say one last thing. I know for the longest time, this is a narrative I bought into. So I've been wrong at times as well. That for the longest time, Bitcoiners were saying that Bitcoin's a hedge against inflation. That narrative's kind of gone away as inflation continues to go up, or maybe plateau what Bitcoin's prices remained falling. But Bitcoin is a hedge against debasement, meaning that you can't print more Bitcoin, or you can't debase the currency or your base layer of money. So it's a hedge against debasement. It's not a hedge against inflation. But as Bitcoiners, we are betting. Not only are we betting, we're planning on the U.S. government at some time, or the Federal Reserve, pivoting and basically printing a ton more money to service the debt of not only the U.S., but to help prop up banks and these zombie companies. So that's my final statements there. Anything else you guys got there? Should we cut to a quick commercial break?
I tried to zoom in on that guy's face just to see, he's like 77 years old. He's a hungry ass old person. He's just playing the game. Let's cut to commercial break. We'll be back in just a moment with JP Baric, and we're talking about mining in Texas and everything in between.
Welcome back, and thank you for sticking through that commercial break. I want to remind everyone, if you have not already locked in your tickets to Bitcoin Amsterdam, to do so now. Ticket prices will be going up next Friday. I'm excited to introduce our guest for today, JP Baric. P, can you give him a proper introduction?
Absolutely. JP Baric is the founder and chief executive officer of Mining Store and Capital Ventures. You guys are leaders in the space. You've overseen 6 different mining deployments, introduced hundreds of people into the mining space. You're super passionate about mining. That is. You also have a super active and successful TikTok, multiple TikTok channels where you've really effectively figured out how to communicate some of these really important topics around mining and Bitcoin to people in a medium and a way that they understand. That's how you got on my radar. I'm super excited to have you in this conversation today and to dig into the mining space and how you think about communicating about Bitcoin to the masses. Welcome.
Super excited to be here. Thank you.
So I'm going to just come out and ask a very hot question, but I watched a lot of Bitcoin miners and made a lot of money on the publicly traded miners who were just ripping from 2020 up until a better part of last year. Money was cheap. It was really easy to take on a lot of debt. A lot of these miners were very aggressively leveraged. And I want to just get your initial thoughts on what you're starting to see out of the mining space with some miners who've had this hodl mentality, have now started to have to capitulate slowly on just the Bitcoin they're holding first, not even going down the rabbit hole of having to unplug miners yet.
So I think there's a few things that occurred. One is that most mining companies.
JP, your mic is hard to understand. Is there any way you can increase the quality?
Let me change it to the next different audio. Let's try this one.
While we're waiting, I'll just do a rehash of.
Check.
Much better.
Okay, perfect. Awesome. It was in my AirPods before. So I was going to go with that question is, Bitcoin miners were all hoping for 100K. I think the whole community was. And so no one was selling coins. No one was like thinking about treasury management. But the reality is we should have been putting cash in the books and saying, I'm no longer going to just commit to 40 cents a terahash. I'm making a ton of money. Now we're at 7 cents, 6 cents a terahash. Why did you not sell before? I think that's the first thing, is that capital management was just horrible from miners across the globe, especially the public guys. Second thing that happened was these public mining companies, they're run by a suite of management. They're not run by necessarily operators for most of them, or people who have done this before. And so some of these guys, they're experienced, but others, they're just, hey, I'm a manager. I'm going to raise the capital, have access to the capital markets. I'm going to deploy that capital with a hosting provider, so I have a higher electricity rates. I'm not fully integrated, and you're taking, like you said, advantage of the wave. So I think that the mining companies that are public are really feeling pressure, and you can see that by the compression in their stock because of all the shorts and different types of capital partners that are placing against them, placing bets that saying they're not going to survive. So at the end of the day, these public miners really are in a tough situation. I hope that if they have a big enough balance sheet, they'll be able to get through it and weather the storm. But the reality is most of them lock themselves into these long hosting contracts, so you just can't turn off your machines. So we've seen machine prices crash, and we expect them to even go lower.
And so there was also a very aggressive, I think, forecast and expectation for what hash rate would look like by the end of this year. I mean, we're now in the second half of 2022. By my understanding, based on what the expectations were at the new year, where we're at right now, I believe hash rate is at just under 206 terahash. Doesn't seem like we're going to be getting to that 300 terahash marker that we were looking at. What are you attributing some downwind pressure?
Yeah, I would say for that pressure, and the reason why we're not growing as fast as we expected was, one is you have maybe 30% of the network is still older equipment, S9's equipment running at 100 watts, 80 watts a terahash. That equipment is going to be shut off or is no longer available to operate or is not running. And so when that equipment's turned off, the hash rate's dropping, which is what we're seeing because of the profitability drop. Second, the energy situation across the globe is challenging miners' ability to deploy new facilities. Deploying in Texas with ERCOT setting rules saying if you have a site bigger than 20 megawatts, you need to go through about a year to 2 year long process. These sites, when deploying hundreds and hundreds of megawatts, especially in the U.S., it's not as simple as, okay, let's start today. You have to put in a load study for electrical load to understand the grid impact. You have to get permits and the correct zoning to run these facilities. And those challenges are things where people can put a roadmap together and say, I'm going to build, 500 megawatts. But there's a big difference between building 500 and just even building 100 because of all these different complexities. And so that's what I'm seeing across the market is that these companies, projected that they're going to have all this hash rate. And then when it came to it, they realized that there's a lot of logistical issues to deploy. And in addition, energy costs going up have made some of those sites that might have been attractive with the Bitcoin price going down, not as attractive. And so those projects were put on hold. I know there's companies, public companies, that have tens of thousands of machines that are just sitting in boxes because they don't have places for them to run yet.
I want to take there are like 100 different ways we can go. I'm just letting you know at a certain point, I do want you to maybe walk our audience through the historical precedent of miners shutting down their rigs and what that actually has, like, that is a very common practice during bear markets. And I don't want to dive down that rabbit hole yet, but I'm just saying it so that if in case I forget to just mention that story. But I want to talk about just the energy grids right now. We're seeing a lot of stuff coming out of Texas. You're bringing up the fact that, some of these mining companies are sitting on miners and have nowhere to plug them in. I mean, gas prices seem to be still hovering at all-time highs. The cost of energy is still slowly but surely creeping up. What, if anything, could possibly have to, or let me rephrase, is there a certain threshold on the upside for cost where, hey, this just is no longer sustainable? Like, this is something that we have to really reevaluate where we're getting our energy from to mine this, to mine Bitcoin. Is there a certain cost per terahash that you're looking at and saying like, hey, at this point, this jurisdiction is out and we need to go relocate?
Yeah, it's a great question. So energy is a local marketplace, and Bitcoin created it into this global marketplace. And so the arbitrage that Bitcoin miners have is between that local marketplace. So for example, here I am today at one of our new facilities in Iowa, the 5 megawatt facility we're currently deploying. That energy price is between, let's say it's $54 a megawatt hour. Now, if you plug a new machine in, that machine has an efficiency rating of how efficient it takes that energy and turns it into a terahash, which is the output that each miner creates. And so that efficiency mechanism determines how efficient you are with that electricity. So you can have a higher electricity cost, let's say at $100 a megawatt hour, and have a very efficient machine, one of the newest machines, and still be profitable. If you have an older generation machine, you will no longer be profitable because how efficient you turn energy, the watts of energy into the terahashes, it determines on the model of that machine. And so right now we're seeing that these local marketplaces of energy are having increases across the board, anywhere between 13 to 20% increases. Now this is coming from the local utilities outside of Texas, and then in Texas, even the markets there because of natural gas prices, as you mentioned. So the local utilities provide energy to their customers with natural gas, gensets, and wind, solar, and coal. And so as natural gas increases, and even the components used to create wind and solar increase, the levelized cost of energy, which is the amount of dollars, or the cost of energy creation, including the cost of the asset, rises over time. And so we're seeing that across the board here in the US, and then even in the world, outside the US and in other countries, it's much worse. When it comes to what's going to keep a miner running versus what's going to turn off when it's become unprofitable, that's the nice thing about mining, is where it's this game of how efficient are your mining operations? Are you able to run through the summer without any heating issues? Are you able to have a low energy contract, or an energy contract which allows you to shut off? Or are you forced to continue to run because you've committed to that energy usage in something called a PPA, a power purchase agreement, where you're going to buy so much power every single day from the grid or from the provider? And so each miner has their own different flexibility and different optionality when it comes to running their facilities. When it comes to the terahash value, 7 cents, 6 cents, I mean, there's not much margin to be made when that terahash is that low, especially with the halving event being 2 years from today. I think that's the one problem, one of the things that people don't realize, like with Bitcoin, you can't just print money as we know, but to create these new Bitcoins, you have to do all of this work. You have to deploy these facilities, staff them, keep these machines operational. That's day in and day out, thousands of people around the world maintaining the network, and each new coin is extremely hard to get. And so when the difficulty bump does happen, or when the halving does happen, it becomes twice as hard to mine Bitcoin. It requires twice the amount of energy. That's a massive input cost for miners across the globe, and we will see capitulation. So I would say Bitcoin would have to drop farther, maybe $15,000 and sit there before we see real capitulation. We already have gone from 220 exahashes down to 206 exahashes, as you mentioned. So we already are starting to see capitulation from older machines, but newer machines are still profitable, still making money. If they're covering their debt service and other fees associated with running the operations, such as their overhead, that's a different question.
I love that, the halving is something that you guys are paying attention to and considering. I want to get a sense from you, like how are you guys planning for, and how do you map out sort of I'm assuming there's a range of what you think Bitcoin's price will be to help you guys better gauge what your necessary hash rate output should be on the other side of the halving. Do you mind walking us through some of those just conversations you guys have internally?
Yeah, so internally, you have your expenses at your facility, and those expenses will, when it comes to a mining facility, we just run through them. You have your lease, you have your internet, you have your trash removal services, then you have your staff, and that staff is the biggest cost for an on-site team. That staff, those staff members, during a bull market, every terahash is worth more, so you might extend and have more technicians on a facility running and working, and then you'll bring technicians down. So even for us in Iowa, when we with the recent drop from $40,000 to $20,000, sadly we had to let some people go because of the reduce in hash rate. Now every terahash we have running, isn't as valuable, and so you want to make sure that you have this much daily profit from your mining facility covers your OPEX at the site. And then once you zoom out from your individual site level, you have your debt obligations, your insurance obligations, your management team, your accounting, your back office, your sales. All of those costs are also then piled onto the operation itself. And so in a halving event, we see, or as we prepare for the halving, you want to keep as many staff as you can to move forward. But there are times when you hire staff and it's like, hey, we're going to hire you. We're going to commit to 6 months because that's where we need your work right now as we move into this bull market, or as we move into closer to the halving. And we know that our hash rate is going to be significantly worth less after that event. When it comes to capital management and that strategy, it's really understanding of when do you want to be putting cash in the bank, which is when Bitcoin terahashes are 48 cents a terahash, or Bitcoin's $60,000. And most miners, including ourselves, didn't prepare well enough, so that now when it comes closer to having the ones who did prepare themselves, who have cash on their balance sheet and who are ready to deploy that capital into the mining space, when the price of these machines drop significantly lower, it's a great time to put the capital in and to buy machines that were overvalued previously, because a machine's cost is effectively what it can make in about a year and a half of production. And so machines prices, we've seen them capitulate. We expect them to kind of flatten out, maybe go a little bit lower here. But when it comes to the capital management, treasury management strategy, we are estimating, okay, if terahashes stay at 7 cents, what does that look like on our balance sheet? What does it look like on our cash flow, more importantly? And then if a terahash goes to 4 cents, what does that look like on our cash flow? And it's a huge difference from 10 cents to 5 cents. I mean, when it comes to your energy costs, most miners, I would say, are profitable at 5 cents a terahash on energy. But then after that, you're going to have to start shutting off. And that's with new S19s. And so we are all, as a mining community right now, I would say, feeling the pain of the price of Bitcoin being lower and not having these new Bitcoins that we're generating being worth as much. But that's part of the game, and that's part of stacking stats in the long term. For me, this is my third cycle going through this, so I was able to prepare a little bit better than others and to be able to allocate capital so that we can grow.
So what are some lessons from the past cycle that you've learned that you brought over into this cycle that helped you and your team be better prepared?
So I would say they come down to most of the lessons we've learned come down to the management of the facility. So when you're running a facility, having your asset management database, when you are operating a facility, making sure you're running your technicians' schedules properly, having the SOPs and procedures to keep machines up, replacing your power supplies, your fans, your control boards, making sure that those technicians go through an onboarding and training process, ensuring that your facilities can remove heat properly and you have proper infrastructure where you're not fighting against the summer heat, and that that you've designed it properly. So we've had multiple summers to work through that on some of our sites. And then when it comes to capital management strategy, it's knowing when to exit machines, or when it's good, and when you're selling machines, to put some cash away so that you can deploy it into new crypto, or you can deploy it into new facilities. So for us, we're constantly deploying. We have another 10 megawatts here in the pipeline in Iowa, and then an 80 megawatt site we're working on that'll be up at the end of the year. And those projects are still going on even if the Bitcoin price drops, because from our perspective and from a longer term investor's perspective, we're still mining Bitcoin at a discount. And we believe that even though it might be a small discount today, that in the future there will still be that arbitrage, which we see in commodities, which is the commodity price will have there'll be a flat price in commodities, and a flat kind of cost to produce the commodity will be about the same price as what the cost of the commodity is, what the commodity is trading at. But what happens is when that commodity does run, and we saw this over the past couple of years with steel, copper, and other commodities and rare earth metals, is that when that commodity does run, it runs much faster than you can actually deploy new exporting hardware. So in this example, new Bitcoin miners to export that commodity. And that price differential is where Bitcoin miners make the most money, is when the commodity rushes up. So when Bitcoin prices increase rapidly, and when new production takes a while to get online, and then when everyone wants to join the space. You definitely have this hot and cold mentality in the mining space where it's super hot, everyone wants to get in, and everyone's talking about it, as we saw with the public guys. And then it's really cold, and people are scared. People don't want to make large capital investments that are capital intensive and can take 6 months. And so for us, our team, we're continuing to push forward, continue to make those capital investments, because we do believe that spread will exist there in the future.
Would this be a fair way of sort of rephrasing what you've just said, in that it's almost like you guys are trying to build out the infrastructure and the entire supply chain now during the bear market, so that by the time the bull market comes, you may not necessarily use the whole network today, but you will use the whole network and then need more anyways come the next bull market?
Exactly. So even if we're not buying machines today, we're still allocating capital to that bottom 20% of the stack, which is the infrastructure, and getting that infrastructure purchased, getting those transformers ordered, doing our groundwork, ensuring that we can have capacity for when the bull market does run, and clients or ourselves, we need to deploy more capital into the mining units themselves.
So let's talk a little bit about individual miners, because I'm a selfish piece of shit. And to be honest, I view the big miners as potentially the bad guys, but I don't know. Maybe I'm just trying to say some things to boost our ratings. Um, for someone like me, an investor type who, I pour over term sheets and I pour over earnings reports, what are things to pay attention for that will signal weakness in a mining company versus some things that will signal strength in a mining company? I know you mentioned something like having cash on reserve is one of those things. Are there other things or clues?
Yeah, I would say there are petahashes under management that are actively running, or their Bitcoins mined per month. If you're seeing a significant drop in Bitcoins mined from public companies between June and August, or June and September, or May and August, that's because their facilities aren't able to handle the heat. So that would be that means they're going to have to invest more capital in order to get those facilities to keep that hash rate up, and that their hash rate is dropping. That's one of the things you can look at, is their net Bitcoins mined. I would definitely understand their full cost of production of a Bitcoin. So not only their energy cost, which is important, but their management salary, what is the board getting paid? What does their middle management look like, or their office? How how efficient can they run their operation? So that's all super important. And then understanding for the public companies how much they spent to build these facilities. Some of the public companies are spending millions of dollars on immersion per megawatt hour or per megawatt to build it out, and that's pretty substantial for the for a machine right now. That if you're spending $3,000 to build out the spot space for it for an immersion setup, but you can buy the same machine for $3,000. Well, now it's like maybe this immersion plan wasn't the best route because these machines, I'm spending double the money to get maybe 30%, but I could actually run 2 servers and get a 200% increase for the same cost. And so looking at the cost it takes, the amount of capital it takes for them to rack it, what their ancillary expenses are outside of their energy usage and energy costs, and then also how secure their energy contract is. Are they running their own facilities? Are they vertically integrated? Do they have their own energy source? Or are they just buying from the grid? Or are they just buying from not even the grid, but buying from a provider such as Compute North or Core Scientific that's actually providing the services? Well, now what is their edge? When Bitcoin mining, when there is blood on the table and the price crashes, it's the first people to shut off. The first people to shut off are the ones that have to turn off their operation and sometimes even default on their power bill if they're unable to pay for it, which would then result in them losing their machines. So hopefully that doesn't happen to any of the public companies, but if it does, we will definitely hear about it and we'll end up in a large lawsuit, because in these hosting contracts, you're committing to power usage for a year, 2 years, 3 years. And so that means you cannot turn off your machines, even if they're unprofitable, which we haven't seen yet, but we're getting pretty close, especially for newer machines.
So let's go down that rabbit hole, because that's a statement you hear a lot. I was in a spaces last night from the Blockware Solutions team, and I heard them like, this is a phrase and a statement you hear a lot, that the final sort of marker of a market bottom in past cycles has been miners having to shut off old machines. Can you walk us through, for the newer people? I'm class of 2019. What has that looked like in previous cycles, and what are your expectations for what that is going to look like in this cycle?
So in previous cycles, what that has looked like is machines that have that wattage to terahash efficiency that is based on the machine age and manufacturer when it came out. So for example, an Antminer S9 came out in 2016, and those machines are 100 watts a terahash. Now, those machines turned off when COVID hit the markets in 2019 and Bitcoin price hit $3,000. Even ourselves here running at 4 cents, $40 a megawatt hour at that site in 2019 before energy prices started increasing, we had to turn off, because you run the numbers and you're like, well, I could either spend the $5,000 to buy Bitcoin today on the market, or I could spend $6,000 to buy energy to generate $5,000 of Bitcoin. Now, the thing that home miners, I would say, is different than institutional miners is, with my home miner, yeah, it's okay. It's one machine I can keep running. But when you have thousands or tens of thousands of servers, that percentage difference of loss of profitability, you cannot keep running. You just will be burning cash. And so effectively, in a hosting contract is where you're committing to the client, the hosting provider, that you are going to use this energy. So that means no matter what happens to the value of a terahash or the price of Bitcoin, you're going to consume energy. And so you're going to be paying $6,000 to make $5,000 of Bitcoin. Now, if you're a well-established company and you have cash on the balance sheet and you can weather the storm, well, then yes, we'll be able to continue to run and pay those bills and just suck up those costs and run those machines and make your contractual commitments. But if you weren't planning and you're, let's say, a medium-sized miner where you might have 100 or 500 machines and you don't have the cash balance sheet to come in and make those payments every month, and then in addition to covering your debt payments, your machines will will be seized by either your debt person, whoever gave you the debt, or the hosting provider. And that hosting provider has every right to take those machines in most contracts if you do not pay your bill. And so that's what the scenario, how that occurs. And so in 2019, when the price dropped to $3,000, it might have only been a week or 2 weeks when you were really unprofitable, but other people could have been unprofitable for months because the price didn't rebound immediately. It went up a little bit, but it still sat, at $6,000 for a while. And we saw capitulation across the market. We saw hash rate dipping. And that's one of the things I would suggest people go look at, especially if you're new to Bitcoin before 2019, is look at the Bitcoin difficulty chart or the Bitcoin hash rate chart back when the price had crashed during COVID, and then back after the 2017 crashes. Even after the price crashes, Bitcoin miners are still building. Difficulty is still going up because of the longer capital spend process and the capital allocation process that we have to make. Is we're not able just to stop projects instantly. And so miners are continuing to build even when the price is dropping. And at some point, the market capitulates. You'll be able to see that on chain, and you'll know it's starting. Miners now that are continuing to run are going to start stacking more and more Bitcoins. Even though they're going to be worth less dollars, there's still going to be more Bitcoins. And the belief as a miner is that those Bitcoins are going to be worth more in the future than they are today.
All right, I lost my tab for a second. Why, I have a problem with something that you said, and it just might be because I don't know this stuff well enough. So forgive me if I'm misinterpreting this. At the time the Bitcoin went down to 3K in March of 2020, I believe, if I'm not mistaken, the block reward was still 12.5 Bitcoin. So if you're spending $6,000 for potentially one block over the course of the next year, that seems like a far more lucrative payout still. Obviously, there's no guarantee that you get that block. So is that part of that calculation then, that there is this level of risk that you could spend the 6,000 on the cost of energy to eventually get nothing?
Not even saying you're mining the block solo mining, simply saying you're pool mining. And so what happens is the value of that terahash and how efficient your machines are result in it not making sense to mine Bitcoin, because you're going to spend more dollars on a day-to-day basis. Let's say every day you're paying your electric bill, than the Bitcoin is worth that day. And so for miners who run their own facility, it makes more sense to turn off their machines, take the cash they were going to send to the electric company, and simply buy Bitcoin, because they might get 10% more Bitcoin buying it on the exchange, creating upward mobility or upward pressure on the markets, versus paying the energy company $6,000 for $5,000 worth of Bitcoin. You can stand by $6,000 worth of Bitcoin for $6,000 on the exchange.
Thank you. So I am dumb. Just needed to clarify that. Thanks. Greg Foss, in one of my earliest conversations with him, brought up this whole concept of, as a miner, to just blindly accept the cost of energy from your energy provider is a foolish business practice, because if you don't control that cost, which is the highest cost to Bitcoin mining, you're just eventually going to get screwed over. Obviously, this depends on what jurisdictions you are. Somewhere like New York, you're probably fucked trying to start a Bitcoin mining rig. But somewhere like Iowa or Texas, it seems like those have, I think, a little bit easier jurisdictional opportunities. Can we break down a little bit of just what energy opportunities are in a place like Iowa or a place like Texas that makes these far more I need a thesaurus in front of me, but
No, that's fine.
a better jurisdiction to mine versus my home state of California, or the place that has now just become Satan's home, New York State.
So energy is this base layer of the world that runs a lot of things in society, and it really interacts with us more than we see until the price goes crazy. I mean, look at Germany and their prices of energy and their cost to heat their houses. It's something where energy is a fundamental building block of society. Now, all energy isn't created equally. And what I mean by that is energy on the functional level is the electrons moving through the system. And we have the cost to generate those electrons. Now, wind and solar and hydro are going to be some of the cheapest ways to generate that levelized cost of energy across the world. So you're going to own, if you own a wind farm, if you own a solar farm, there is no fuel going into that asset to generate that energy, which means that your ongoing operating cost of that energy asset is extremely low. Now, when it comes to the jurisdictions of where we sit, we now add another layer of politics and regulatory compliance on top of the physics layer of how the electrons function. Now, this layer of politics, contracts, territories, and utilities is where things get messy. It's where middlemen are built. It's where 100-year contracts are signed between one utility and another. It's where lobbyists play a lot of time. It's where the goal is not to get the cheapest energy to the consumer, to the Bitcoin miner, to the community, but the goal is to increase the balance sheet of the utility and continue to build assets and get more debt on the balance sheet to grow the overall organization. And so when that becomes the goal, and we're no longer focused on providing the lowest energy rate for our consumers and for our communities, the game kind of changes. And so if we zoom out from the utilities, we can then go to the markets. Now, in the US, there's multiple what we call ISO or RTO markets, and they're markets where energy is traded. So energy is traded on a retail and a wholesale level. The problem with most states, except for you mentioned New York and actually Texas and a few others, they have something called open retail access. That means that anyone who buys energy can buy from the same spot, the same areas the large group buys from, the wholesale providers buy from. And the wholesale providers that are buying energy in states that don't have open retail access are the utilities, are the investor-owned utilities, are your co-ops, are your municipal utilities. So those groups of people are the only ones that can buy from the wholesale market. Now, why is this important? Well, over the years, because of the grid being built out with more renewables, solar and wind assets, we've seen that those non-fuel based sources of energy are built because of their tax credits. Now, these tax credits last for 10 years on the asset, and they basically pay for the whole asset plus get 8 to 10% interest for the person who put up in 8 to 10% return for the counterparty who put up the asset. So now once this wind farm is built, they're usually built in areas with low population density. And so that means that no one really needs the power. So that energy has either two things happen to it. One, it's curtailed, which means the energy is never sold to anyone and it's just what goes into the ground. Or two, the energy is sold on the wholesale market for pennies on the dollar. So most of the wholesale markets are available, like all the data is available to the public. You can see it, you just can't buy the energy. And so wholesale energy will be trading at $15 a megawatt hour, $20 a megawatt hour. And the only people that can buy that are the utilities in these regulated markets. And so Iowa is a regulated market. So we have to go through a utility. That utility then goes to another utility, and then that utility buys the power on the grid. And so we are working on legal and regulatory frameworks that would allow us as a Bitcoin miner and other Bitcoin miners around the world around the US to buy power directly from these wholesale markets. But it's very complex. It's contractually complex to be able to do legally within the legal framework that's presented. Even if I own a wind farm or solar farm that's generating energy half of the day, I can, even though I'm producing energy and I own the asset, I can sell into the wholesale market. I can't buy power back from that wholesale market in these regulated states. I have to go to a utility and say, hey, when the wind isn't blowing, when the sun isn't shining, I need energy. I have to buy from them. And so I might be generating energy from my wind farm at $8 a megawatt hour. And then when it comes to my grid, I might be buying it for $50. And so my all-in price is closer to $30 a megawatt hour. But because of the regulatory frameworks and how these frameworks have been set up and are entrenched in society for the past 100 years, we're stuck with the systems we have at play, and we're stuck with higher energy costs for everyone. And it's sad. It's one of the things that I'm always working towards improving and trying to figure out how do we make energy sales, especially towards Bitcoin miners and being able to secure the most important network in the world, cheaper, so that you can continue to protect your capital investment, grow your organization, and hire more talent for these mining operations and be able to run them.
Is there a jurisdiction that you would want to see like, is there a process in some state or country even that you're like, that I want every other place in the world to sell energy based on this system in place?
Texas is it. It's the open retail access. It is the energy markets where anyone can build an energy company that buys energy and sells it to others. Anyone can be that retail provider, and it all depends on what voltage you're attaching to the grid at. Is the lower the energy cost you're getting, which makes complete sense because the substations are what step down the voltage. A substation is that big chain link fence that you see with a transformer in the middle, and it's like metal and it's connected to the wires, and then it steps down the energy, and then energy goes to the community. Those substations cost a lot of capital, so the utilities need paid for building those. But the thing is, it's like the capital that they're collecting versus the substation's cost is astronomically higher. And so ERCOT says, and ERCOT is the governing body of Texas Grid, says that anyone can participate in the market, and the higher voltage you are, the cheaper the rate is. And if you're at a certain voltage, you can be on the wholesale market. You can buy directly from there. If you're not at that lower voltage, then you have to use someone else's infrastructure. And so it makes perfect sense. And it took away a lot of the problems that we have in the Midwest and in other places like North Carolina, South Carolina, that have these energy issues or closed markets more appropriately.
Hang on, sorry. I was just typing that out to tell my girlfriend we cannot move to South Carolina. Let's talk a little bit about Texas now, and let's go down this rabbit hole because you hear how the way Texas's grid is designed has certain benefits, but it also has certain characteristical or certain flaws. Right now, you're dealing with a heat wave, and all of a sudden, all these miners getting shut down. Is this a problem actually for Bitcoin as a whole, or is this just something that is a byproduct of the world that Bitcoin can adapt to?
No, I would actually say it's a benefit for Bitcoin miners because the Bitcoin miners that are, the Bitcoin miners that are turning off in Texas, they're doing a great thing for the community. And I live in Austin, Texas. So it's something that I want to make sure I can run my AC when it's 105 degrees there. And so have this personal benefit of this whole operation. But anyway, these Bitcoin miners are getting paid to turn off. So Bitcoin miners are very unique because they are something called a demand response vehicle, and they can turn on and off their energy usage at the click of a button effectively. So you can take your Bitcoin miners from using 1 megawatt and bring them down to using 100 watts, so like a 99% increase or decrease in consumption in a matter of minutes. Now, there are very few other operations that can do that on the demand response side. So Bitcoin miners are building out this very unique demand response grid, and in return, they get paid for every hour per megawatt that they are shut down. Now, there's different programs that you can be in depending on the markets you're in. There's different programs for ERCOT, for SPP, which is Iowa and Nebraska, MISO, which is also part of Iowa and other areas. So there's these markets that have these different demand response programs. Now, historically, that would have been a battery, would have been a demand response program. Or, for example, when a utility says like, hey, we're going to add a smart meter, we're going to shut off your AC, for 15-minute intervals every hour, and that's going to help us conserve energy on the grid. Those are also demand response programs, but very few people can turn off like Bitcoin miners do. You don't see data centers turning off because then you're going to lose access to your Netflix and your shows and this live stream. You don't see manufacturing plants turning off like aluminum smelters that use a lot of energy because then they have this raw product in production. But since Bitcoin miners get paid every second for their work, they're able to be more redundant and turn off the power more responsibly, effectively, compared to other energy uses. So Bitcoin miners in Texas, huge plus to them for helping save over 1 gigawatt of energy on the grid. And so what does that mean if we zoom out to like the large scale grid? It means that we can continue to build renewable generation because with that renewable generation, it's intermittent. So we don't know when it's going to blow. We don't know when the sun's going to shine. So we have these massive fluctuations in renewable generation. And so with the Bitcoin miners, what we do is we build a strong base load that can be turned off. And that strong base load helps ensure that more renewables are able to penetrate the system and become installed. Without that constant demand for energy, those renewables would not be needed 90 or 80% of the time, resulting in they're making it not economical to build out those projects once their 10-year tax credit is done. So that's how I see Bitcoin miners and renewable energy working, is that they provide this flexible load that can be turned off on a minute notice, and that allows for more renewable generation to be put together, because you only can turn on so much natural gas and so much coal to meet demand. And so that's I would say the biggest advantage of Bitcoin miners and renewables, and how we're going to get farther on the renewable penetration for these grids. To get 100% renewables, it's going to require a massive controllable load that can turn on and off and match the demand of the renewable energy.
So I'd love to ask, about a week ago, there was a story in Bloomberg about Lancium using batteries. And, the headline was, Lancium signed a deal with Texas battery storage provider that will allow it to continue mining without putting stress on the state's grid when demand spikes. And my reaction to that is I was like, that just sounds like some ESG bullshit. Like, why would they need batteries to mine Bitcoin if everything you said, which as I understand it is absolutely true, you can just turn ASIC miners on and off at any time?
You're exactly right. So when it comes to batteries, I've looked into them a decent amount, and I haven't looked into the tax credits with batteries. But if you're without tax credits and batteries, your cost to your cost per megawatt hour for that energy that you are selling back to the miner or to the grid is going to be very, very expensive.
Yeah,
So yes,
exactly.
there are times when it does make sense, when Bitcoin's at 60K and everything's 40 cents terahash. But when I was running my numbers, it is very, very hard to have a battery setup work well and be able to deal with these fluctuating prices of power. Now, it's not impossible, because what a battery does is a battery allows you to buy power from the grid at that wholesale rate. I'm unsure exactly how they're able to get the energy on the wholesale level as a battery, but probably because they're similar to production. So they take the power, they buy it maybe for $1 per megawatt hour, and then they can use it whenever the price is higher. Except the biggest problem is you only can store so much energy, and the cost for every megawatt is about 10 times more, at least it was a few years ago, to build out batteries per megawatt than to build out a Bitcoin mine per megawatt. That's with all your miners in it. So the cost is significantly more per megawatt to build those batteries out. But there are advantages to it. I do see batteries having significant opportunity with with wind farms and storage combined, and being able to utilize those.
Got it. Okay. So that actually makes more sense if there's like tax incentives and things like that for a miner to basically get these batteries at potentially lower cost. And then when the price of power spikes, they're able to economically sort of outcompete other miners because they have this battery store. Okay. Got it.
Yep. And in ERCOT, they could decide, okay, I'm going to actually turn off my miners, still get that LMP credit, and I'm also going to use my battery energy to sell back to the grid, which could be selling for $1,000 a megawatt hour. I mean, there's times where the grid in ERCOT hits $8,000 a megawatt hour, and normally it's trading at 20 or 30. Now that arbitrage is massive, and so those opportunities will only continue, especially with renewable energy being added to the grid and natural gas, coal, and nuclear plants being shut off.
Got it.
So why then? So there's so many opportunities to piggyback off of what P is kind of saying, that the ESG fuckheads have essentially taken to attack Bitcoin mining. And on numerous occasions, these idiotic attacks have been disproven and discounted, as recently as last week, where P and I were hosting a Twitter Spaces, where I'm so sorry, Daniel, I cannot remember your last name, but he comes from the ESG space, wrote a very in-depth article, Batten, thank you, Chris, explaining how actually, the way we've been flaring off excess methane gas is actually net negative for the environment versus this opportunity that has presented itself in Bitcoin mining. What is your least favorite FUD, and what is your sort of go-to comeback to it?
I'd say my least favorite FUD with the energy debacle in question is that using energy is inherently bad. Now, like I said, energy is this fundamental building block of human life, of the capitalism, of standard of living. I think Nick Carter posted a great article, a few years ago, about, there's a chart where it shows the life expectancy and how much energy that country uses, or life expectancy and energy penetration and how many people have access to energy. Energy is a fundamental building block. Like I challenge you to say, okay, let me live today without using any hydrocarbons, any energy. Now, you can do that when you're camping, and that's effectively what you're doing. You're camping because our whole society is built on this energy usage. And so when we attack the energy usage of Bitcoin miners, it's because people fundamentally don't understand how the grid works and how energy is bought and sold and how much energy is just wasted. There was an article that over 50% of the energy that's generated it's just wasted in heat. That could be energy just dissipated on the line. That could be energy dissipated in the motor as it's being utilized. And so most of our energy just goes up to heat. It's because electricity is very unique when it comes to commodities. And how it's unique and how it's different than any other commodity is that it has to be utilized the minute it's made, not the minute, the second. The microsecond you make electricity, you have to use it. You cannot effectively store this energy like a barrel of oil, like natural gas, like corn, like soybean, like any of these other commodities. You have to utilize this asset immediately. And so with that being said, the only way for us as a civilization to progress and to grow is to build more sources of clean energy, but then also use that clean energy to create economic value. You can generate the energy, but if you're not using it, then it's not going anywhere, and you're only incentivizing this energy generation based on tax credits, which is effectively, making private equity and the larger capital groups richer. It's not helping out the common person. It's not lowering the energy costs for these communities. So the incentives are, I would say, misaligned in most of these energy markets. They're incentivized to build the asset base, not to bring consumers cheaper energy. And then secondly, people don't understand how the fact is that you can't just use this energy later, or you're using the energy, so I can't use the energy. Well, that's why Bitcoin miners turn off, because there's programs in place where they're incentivized to turn off their energy and not use it and give it back to the community. So that would be my biggest thing when it comes to those other comments about energy usage.
I don't hate it. I mean, I'm the biggest proponent of, I believe the next iteration of whatever we consider clean energy and energy efficiency will just come out of the Bitcoin space, because miners are incentivized to find the cheapest source of energy. So that's my bold claim for the next 24 months. My last few bold claims include a potential conversation around capping the price of oil, which happened no less than a week after I said it. And then there was another one. Chris, remind me about how great I am at predictions.
I like you got like a sticky note on your computer that's like, I was right about X, Y,
it's like
Z.
It's one sticky note next to the camera lens right there that has all the things that I was right, and then a whole laundry list of everything I've been wrong all the way over there. So I want to make a ridiculous statement for the sake of making a ridiculous statement, and P might have a heart attack when I say it, and JP might never talk to me again, but just bear with me. I'm going to say it and then I'm going to explain it. ESG is good for Bitcoin mining.
Sorry, I couldn't resist. Keep going.
Fair. So ESG is actually good for Bitcoin mining. In this short-term window, we saw companies like ConocoPhillips, and we've now seen, I believe, Chevron adopt some form of Bitcoin mining as this idea of like, hey, we're offsetting this bullshit that we do in the world, and we're now ESG compliant as a result. So my argument then is, if all of these other energy oil type of companies start to incorporate Bitcoin mining in any capacity, whether it's by using the methane gases or by in other capacities whatsoever, is that a bad thing for Bitcoin? P, I could see he wants to say no, so I actually am going to lob the question to P first, and then JP, you can dunk on both of us.
Yeah, JP's going to have the best answer here, but my view is that when you have the economic incentives in place correctly, it will drive the thing that is best for everyone. So miners are incentivized currently, in many cases, to burn flare gas because it is a cheap, it's a not a type of stranded energy, but it's like almost like it's just useless, or it's viewed as useless by most people because it's very difficult to transport flared the gas that would just be flared to a place where you can actually capture that power. But Bitcoin miners are super easy to just put up anywhere. So I still think of ESG narratives. It's more like in the same way that miners and entities are doing sort of energy contract arbitrage, right? If you're a miner, you're constantly trying to find these, not even loopholes, but like these, the cheapest power you can get for the longest amount of time via contracts. That's just totally normal. And ESG is basically I would argue, ultimately harmful kind of like cultural arbitrage opportunity. I've talked to so many miners who publicly, they're like, oh yeah, we're pro ESG, we're good to go. But behind the scenes, very privately, they'll say like, yeah, I mean, ESG is bullshit. But we have to play that game because that is the game that is being played. That is the market that we are living in. And so we have to basically on the publicly support these narratives because it's another type of arbitrage opportunity. I don't know. JP, what do you think?
I would say the ESG narrative is overall a benefit for Bitcoin miners as long as it doesn't turn against them. I mean, it has, but I'm not saying fully we need to ban Bitcoin miners. As long as that does not become part of the ESG narrative, I believe the reason why I think it is good for Bitcoin miners is because the power arbitrage and the grid's instability is only going to increase with these renewable energy assets that are being generated that are on the grid. And so that arbitrage and that difference between power prices and the fluctuation in power prices that Bitcoin miners are one of the few industries that can take advantage of, it will allow ESG, that penetration of ESG will continue to help Bitcoin miners because of those low power prices and those difference in power price.
God damn it, I pulled a P.
They're doing road work. They're doing road work on my street, and so I have like multiple setups to try to like limit the amount of background noise. Just like jackhammers going off constantly. I'm doing a pretty good job, but apologies for the constant mic cutting in and out. Anyway, the claim I just made was that you are a minor spook and that Q is still wrong. But
Absolutely not, dude. I literally said in way less of an eloquent fashion exactly what JP said. So 2-1, we win. P was wrong. Add that to the tally sheet, Chris.
For now.
Let's talk New York. What was your initial reaction when you sort of saw this news coming in, and what are your fears from a regulatory lens for what could happen to Bitcoin mining?
Yeah, so I was very, very upset when I saw what was happening or heard what was happening. Then I began to look more into the issue and realize that, okay, specifically what they're going after is the purchase of energy generating assets for use to Bitcoin mining behind the meter. Now, I don't necessarily know how, if they're going, even if they make this law, if it will stand up due to the fact that Bitcoin, the way I view Bitcoin mining is that it's code and code is speech, and free speech is one of the strongest things that's protected in America. It's, it's just one of our core values. And so when it comes to running code on energy that you made with a power plant you own, there's very little that I could see a government doing to prevent that. Now, I do see the opportunity for governments, in New York kind of went down this path to say, okay, you can't do that. But I see governments saying, okay, you can't sell energy to the grid. If you're selling it to a Bitcoin miner, if you're a natural gas or a coal plant and you're selling it to a Bitcoin miner behind the meter, you're not able to sell it to the grid. And they can do that via the licensing, because every power plant and every grid power producer over a certain megawatt threshold has to have these licenses, these generating licenses. So they could revoke their generating license. But I was upset that, I first thought it was a blanket ban in all of New York. I said, this is horrible. Then I realized, okay, it's not a blanket ban. It's only for people that are generating energy behind the meter. So the grid is still going to be able to be utilized in New York. And there's still people that we're consulting with projects up there. But if this does take precedent and they continue to move down of saying, okay, you cannot use these energy plants to mine Bitcoin, that is setting a precedent where you're telling someone what they can and can't do with the energy they created, which would be, I think, fundamental in how our society works, because energy is that backbone. So it'd be horrible if it went that way.
Is there anything that you're keeping an eye on more broadly about Bitcoin that may not necessarily be mining focused, but is just something, again, from the regulatory lens that you're like, yo, these guys are idiots?
Honestly, nothing, not really. I've been in crypto since 2013, so I've seen a lot of the ups and downs, and have really dug into a lot of the altcoins and side projects, and even the Bitcoin fundamentals, and have a good understanding there. So now I'm really focused on understanding energy and that kind of game or system of rules, and trying to connect the two through mining. Less of my time is dedicated towards Bitcoin in its future iterations. I do think Lightning Network is super cool, but I can't really talk much on
That's fair. Neither can I, but that doesn't stop me from talking
it.
about Lightning or mining for that matter. um, let's keep it for a second on the regulatory aspect. Not to This has nothing to do with mining whatsoever. I just want your general opinion right now. Thoughts on politicians who run on a Bitcoin platform, pro or against?
um, I'm not into politics much, but I think that if you're supporting Bitcoin and you see the potential that it has for humanity and for society, then that is something that would support. And I think people are going to start coming around and supporting those politicians. I think Bitcoin means something different than it did when I started. The community has grown dramatically, and so when you can say I'm a Bitcoiner, that has a different set of ideology than when it did in 2013 or 2014, when the community was much smaller. Now, being a Bitcoiner can mean you can have let's say a much wider range of beliefs about the world and how Bitcoin should be utilized. But I think if you come down to the fundamental aspects of Bitcoin, in that it is fair money, it is money created by energy, it is money that cannot be debased, and one Bitcoin equals one Bitcoin, and everyone should have access to it, then I'm all for supporting those type of people, and hoping that they do share that they're a Bitcoin supporter, because I think as we continue to grow the community and more Bitcoiners are kind of come out slash or people learn about Bitcoin, I think it's going to be one of those things where the society will start to shift its lens, especially the younger generation, millennials, shifting their lens on the value of Bitcoin and what it means for themselves as a wealth preservation tool, as we continue to fight inflation and creation of money.
What did it mean in 2013 or 2014 when you said I'm a Bitcoiner to someone else? Like, what did that imply?
I think it really, for myself, then it implied a set of libertarian principles, a set of libertarian beliefs, and I self-identified as a libertarian back when I was in high school, and even before I could vote, I guess, and I was just, that was the type of ideology set that I really believed in. It was like, your money, the government should not be able to control it at all, and that this is money for the people. It's a global thing, a global initiative. I think those were some of the conversations, and beliefs that I had, that Bitcoin was going to change trust on the internet, that it was this fair system. I think maybe the beliefs were just more not polarized, but more like in that realm of libertarianism. Now I don't necessarily think you can be a Bitcoiner, but you also can be like, I love NFTs and I love all these game to earn projects, and I love all this. And I'm not saying that doesn't make you a Bitcoiner today. It's just there wasn't all of those other things to go work on and care about. It was more of like, this is the future of wealth preservation. I want to be focused on just that. Or I think people nowadays utilize the term cryptocurrency and crypto and Bitcoin interchangeably, when in my mind, it's still Bitcoin is the value preservation tool that the community has. And the reason why it's the best at doing it is because of the mining process and how much energy goes into keeping your Bitcoin secure, versus these other coins, which really flow with the economics of the overall market and follow Bitcoin's price and its movements.
Okay, I know you hate politics, but I feel like present day though, Bitcoiners have really flocked, and authors like Safety and Moose have really put into words the feelings that a lot of people have had over the political powers that be. And you kind of see this contingent of almost pseudo anarchists who have become a growing minority in the Bitcoin space. Um, where, like, where does that fall as far as what Bitcoin was and where it's come to? Is that a movement that is helpful for the overall goal of Bitcoin from where you started and what you guys were trying to accomplish way back when?
I would say Bitcoin is money separated from the state at its in fundamental core. It allows us to scale trust. The state has inherently created this trust in the U.S. dollar and the currency, and that has helped us as society organize and build a lot of what we have today. Now, where I think the issues lie in that system is that organization, that society necessarily, people don't feel like it's working for them anymore. It's not making their lives better. A lot of that is because of the rules and the politicians that have created the groups and helping out their buddies to get the contracts and do the work, and it's kind of created this inner circle of individuals. It's more about who you know versus what you know, or and I think with Bitcoin the goal is that it's more about what you know than who you know, and that everyone's on the same playing field. So one of the big things with me with Bitcoin mining or Bitcoin in general was the Byzantine generals problem. And being a young high schooler that was, rowdy and didn't like to follow rules, it was the fact that every general in the Bitcoin space or in the Bitcoin mining space has to approve that this is okay. And we're all the same level. No one's better than someone else. There's no hierarchy there. I think that what originally brought me to Bitcoin in 2013. And so I think the crypto anarchists are saying something similar, which is there is no hierarchy. We can govern, we can create this trust, we can preserve our wealth, we can separate dollars from the state, all at the code level. And we do not need politicians. We don't need these types of these other types of rules that are changing on a whim or can be influenced by corporations and by other groups. That's kind of my recap and thoughts on how it's changed over the years and what I believe about Bitcoin.
I'm fully on board with the anarchy of it all, if I can be completely honest. But that's just my two cents.
I have a totally random question.
Go. If you say fuck, marry, kill, I'm going to tell Chris to kick you off the screen though.
No. We'll talk about that later.
Do that question later. I have actual real important business to handle with JP right now.
All right, cool. I didn't mean to derail you. Continue when you get to a break. Come back to me. I have an important question for JP.
Okay. I want to go back a little bit, and I've asked this question to a handful of miners, and probably because what I'm really asking for is your 10-year business plan, and no one wants to give it to me. I don't get an answer that I like, but we talked a little bit earlier in the episode or earlier in this interview about, the fact that you and your company, you do take into account the halving and the fact that the block reward is diminishing over time. Is there a threshold? Is there a point in the future that you guys are sort of eyeing and saying our entire business model has to shift to something else because said block reward is smaller?
Yeah. So Bitcoin, when you look at it in the amount of Bitcoins that are mined, we have the halving, which cuts it in half every 4 years. When you look at Bitcoin in the terms of dollars, that the amount of Bitcoins and the value of those Bitcoins mined has gone up by 5x every 4 years. So in 2017, it was $5 billion per year in mined coins. In 2021, it was $20 billion or almost $25 billion in mined coins. So I expect that the next halving, the same thing will continue. That the overall, even though the amount of Bitcoins that are being mined, the overall U.S. dollar value of that Bitcoin, because of how significant and how hard it is to acquire these coins, there will be millions of computers looking to get these coins. So I don't see Bitcoin miners, going away in the next 20 years, because between now and the next 20 years, 99% of all the Bitcoins will be mined. Now, once we're down to the last 1%, those are the times where I still believe it'll be a valuable business. The operators that are going to be running those businesses will be, A plus. A lot of it will probably be automated. I doubt we'll still be doing air cooling. For our company, our biggest focus is on energy generation. So acquiring stranded energy assets and moving in towards that direction, less of like focusing on, Iowa co-ops. It's a great midterm or short-term strategy to grow, but it's not that low-cost energy that you need to compete. Because if you have $50 megawatt hour power, but you can get $10 megawatt power at a wind farm with a great storage solution, or some sort of gravity storage solution, or a way to store energy when the wind isn't blowing. Well, now you're 5 times cheaper than anyone else. So the halving event, well, hell, you're still, even if you lose half your value and no one turns off, you're still going to be making money because you are 5 times cheaper. I think that's the biggest thing with energy. It's like, it's the same electron at the end of the day. If you're at $10, that's significantly cheaper than $30, $40, $50. And then from there, it's like you get to $5, that's even cheaper. And so for us, we're seeing that there's plenty of, there'll be plenty of production or of wind generation and solar generation in the US that comes off their tax credit. And there's no natural buyer of these assets. Once the tax credit's done, no one really wants them. So Bitcoin miners are the one buyer that I can see coming in, acquiring these assets for cheap and deploying their infrastructure at scale.
So it sounds like there is a degree of Bitcoin mining companies almost turning into the local energy providers at a certain point in the future, out of necessity more than anything else.
Out of necessity, and that's where the regulatory benefits are. If you own a utility, you can buy from that wholesale market, that special place. And so there are utilities for sale that are not for sale, but that could be acquired, that are way cheaper than a public mining company balance sheet. So the fact is, I think Bitcoin miners will start to buy municipal utilities. I think they will start to buy more and more generation. That's just where we're headed. It's how do you win the Bitcoin mining race? You have to have the lowest cost of energy, and you have to own your generation.
I mean, if they were smart enough to do it, they obviously would have done it at this point. But as like what possibility, or what is the likelihood in your opinion, and we could be probabilistic about this rather than like black or white, of any type of energy company, whether it's an oil or gas manufacturer type company, or if it's your local electricity provider or your local natural gas provider, whatever it is, what is genuinely stopping them from going out and buying a whole company, or even just starting to slowly build out their own mining capabilities or operations? Because it almost feels like, the way we're looking at it, at a certain point, we will overtake them in value and then we will just absorb them. But right now, they drastically outweigh what a mining company is worth, and they could just absorb us very quickly and easily.
Yeah, I don't necessarily know if Bitcoin miners are going to absorb energy companies. Energy is just, Occidental these are massive companies backed by Berkshire Hathaway and other groups with billions and billions of dollars on the books and assets. So they're behemoths. When it comes to why aren't they doing this Bitcoin, why are they Bitcoin mining? One, I think the biggest things, and some of them are, but I think the biggest thing that prevents companies from entering the Bitcoin mining space that are in the energy space is simply the risk that they need to take to enter the space and the hedging available. You can't hedge your hash rate effectively. You can hedge your Bitcoin price, which is going to help, but you cannot hedge your difficulty increases. And you only can hedge your Bitcoin price for so long. So when it comes to the hedging available for miners, they can hedge half of the equation, but you effectively can't hedge difficulty at any scale at the moment. Now, companies like Lumerin with Titan are working on that and working on marketplaces where a lot of people to buy and sell hash rate, but there's no way for a financial institution to put together a deal where there's very little risk and the return is a constant 10% a year. Now, that's what I would say most of the energy businesses in the world, they're looking for 8 to 10% a year. They're just looking to compound that every single year on a massive balance sheet. They're not looking for a 25, 50% return. To them, it's more risky than it's worth it. So that's why I think that Bitcoin mining, energy companies are not coming into Bitcoin mining, is because they don't truly believe that it's going to be the future of money, and they don't fully understand the value it has today. Because they can't hedge the future decline of Bitcoin or potential decline of Bitcoin, then they're not willing to enter this space.
P, you can ask your stupid question now.
It wasn't stupid. It was brilliant. So, JP, I have a vision. Where I am in the country, which nobody knows, everybody knows, it gets cold during the winter. I have a vision of having, cheap, not necessarily profitable ASIC miners producing heat, which I then pipe in little ducts, onto my face when I'm like sitting cooking my barbecue outside. Here's my question for you. Also, I'm in a heat. I have a really primo rabbit hutch that I want to do the same thing with. So here's my question for you. When should I buy my S9s? Is it now, or is it like, over the next 6 to 12 months?
And before you answer that, this is not financial advice.
No, I literally asked the question for myself. I'm going to be losing money on S9s to, be supporting the Bitcoin network because I care.
Cannot stress this enough. This
My
is
question
not
for you
financial
is,
advice.
why don't you care? Why do you want to harm the children? JP, please answer the question.
So I would say you want to buy your Bitcoin miner when all of your other infrastructure is completed and done. So for your example, you want to buy your Bitcoin miner once your piping is done, once you have a 20 amp circuit ready, dedicated for your Bitcoin miner, once you have figured out how you're going to bring cold air into the miner and where you're going to pump that hot air and where exactly you want in your house, or how it's going to, and that's what I would say, because Bitcoin miners, if they're not running, they're always losing value. So you don't want to buy a Bitcoin miner today if you're not ready for it tomorrow.
Yeah, I'm not going to do any of that. I already have one, and I want to know when I should get more of them. So when is the price of S9s going? Is it going to go down from here, up from here, sideways from here?
I mean, it could see a small drop from here, but if you already have your setup, like, buy some more. I mean, the pricing is probably get an S9 for $20 now, $30.
That's not real.
I mean, they were that cheap in 2019. I don't see why they're.
JP, you're fucking with us right now.
Because I will buy a fuck ton of.
I will literally write you a
S9s.
check for 100 S9s right now.
They don't make that much. Let me see.
No. To be clear to everyone listening, I am 100% planning to lose money on my S9. I just think it's cool as shit. So, there's a reason that they're cheaper. But I've never heard of them being that cheap.
I see a used one on eBay for $250.
Yeah, but eBay is gonna
old. Those prices.
Yeah, it's gonna scalp your ass. All right.
You're telling me I could find it at, like, dude, I will literally go buy. I don't give a shit how expensive electricity here in California is. I will go buy one miner S9 just to say I'm now mine Bitcoin.
No, you won't. You're gonna lose so much fucking money. I used to live in California. I was paying like 26 cents per kilowatt hour. It was.
I just have to tell my parents how much the electricity bill is going to change.
Jesus. All right. Real questions. You've answered my question, JP. You can now ascend to Valhalla.
Let's see. There was 4,000 S9s posted on. Oh, those are fans. Damn it. S9s right now, back in July 1st, they were selling for $139 each.
Yeah, but again, that's like in bulk, right?
No,
like I gotta buy like. No shit.
Pete, I will split a bulk order with you. Like, stop negating
1st.
this.
Holy shit. All right.
They're going to be cheaper.
I'm ready to lose some money on a space heater. Let's fucking go.
But like,
I mean, we literally have tons of them sitting in the container. You guys can send me your address. I'll send you some. They're just sitting here.
It's going to happen, JP.
You're going to regret that.
Send me your address. You pay for shipping. I'll send it to you.
You got yourself a deal.
Oh my God, done. Okay, let's unpack this. We know that the cost of energy is an important variable in whether or not your at-home mining setup is profitable. The second layer of this is how much hash rate you are providing. What are the other variables that go into this calculation, or is that really it to determine how profitable?
So the profitability is really comes down to your only other thing that I would add is that joules per terahash, or how many watts of energy you use to generate 1 terahash. That's the only thing that actually that kind of sits between those two equations. So you have your input, your energy cost, your output, your terahash value, and your value of your terahash. In the middle is how efficient you change the energy to the terahash. Now you can include your energy, you can include your machine's efficiency rating in there. You also can include your OpEx in there, your staff in there, your debts in there. That all can be in your watts per terahash, because effectively it's sitting in the middle of how effective you can turn your raw costs into a terahash. So that's really it. It's a pretty simple math problem. It's not too complex. The problems come down to running a 24/7 operation, staffing one, finding the location, getting permits, building out infrastructure, dealing with supply chain issues. That's where the issues come in.
Sorry, I was just doing some math in my head of how much more money I can make if I just quit my job right now and go start mining Bitcoin full time.
You will lose money.
Yeah.
P, you can now ask your marry, fuck, kill question.
Nah, I'm bored of it now. I mean, I'll ask it anyway because we now talked about it so much. I just got to ask it. But the question is, it's played out. It's marry, fuck, kill, Janet Yellen, Jerome Powell, Christine Lagarde. And if you want to get spicy, you can add in Augustus Carstens.
I didn't even remember. So you said Janet Yellen, Jeremy Powell, and who was the third one?
Jerome Powell and Christine Lagarde.
Christine Lagarde. Kill Christine Lagarde, marry Jerome Powell, and fuck the other person.
You nailed it. You answered correctly. Jerome Powell controls the money printer for currently the world reserve currency. So you marry his ass, divorce him immediately. You get 50% of that wealth. You get 50% of the money printer. 50% of infinity, as Q has pointed out previously, is infinity. You're good to go.
I love it.
Well done, sir. Well done.
That's a lot of S19 miners.
Way more than exists.
So back to like the non-deranged part of this conversation. I wanted to ask you, you are incredibly effective on TikTok and other social media platforms. I spend a lot of time thinking about what is the most effective way to bring as many people to Bitcoin as possible. I really do. I view it as this, I feel like this internal like moral imperative to help as many people as possible understand that fiat currencies are this melting ice cube. And you seem to have figured out how to really effectively do that via these platforms. So how do you think about that? What have you found is super effective as you are communicating about mining and Bitcoin in general?
So when it comes to content creation, I've had some great friends that have been able to build audiences and help me a lot when it comes to creating this content. It comes down to consistency. The hook is one of the most important things. Showing unique things. So when people see a Bitcoin mining operation with a bunch of computers, that's not something you see every day. And so you want to highlight the things about your industry, your life, for example, Bitcoin mining, that are on the fringes or on the edges of what people see. And so that could be how much heat that Bitcoin miners generate, how loud they are, how much money a Bitcoin miner makes. People love the idea of computers making money for them, even if it's an S9 and it's running in their house and it's unprofitable. It's like those type of things we've seen people connect with people. And so when it comes to making this content, what my team and myself is focused on is be consistent, create content that shares the value of what Bitcoin is and why it's important, and then also walk them through the process of how much a Bitcoin miner will make and how to do the calculations and how to get started. The reason why I create content is because I want to build the ability for people to invest in Bitcoin mining and get into real Bitcoin mining operations with influencers at a very cheap, at $100. So we launched this thing called BitVault online. It's BitVault at WeFunder.com. WeFunder is a regulated crowdfunding platform where you can raise money through the Reg CF framework in the United States up to $5 million per year per individual. And those individuals can go to their communities and say, hey, I'm going to start a Bitcoin mining operation. I'm raising money. They can take their money from their fans, and then everyone can get exposure to a Bitcoin mining operation running at a large scale facility and see the financial returns from that. So my goal is to make Bitcoin mining more accessible by dropping the entry price, which we are doing now, and closing up our first WeFunder BitVault launch with Josh Terry in the next couple of weeks, and providing that accessibility. and then telling my story through content. One of the things that I would say, my friend Noah, who's a video editor who made the video that went viral, that got over 33 million views, what he did really well was vocal tonality and telling the story. So we took a script that got 10 million views previously on TikTok. We edited one line from it and made the same script again, and then that video blew up even farther, all because we knew it was a good story. We knew it was personable, telling how I got into Bitcoin, sharing that I bought 20 Bitcoins in 2013, and showing people that you also can be a Bitcoin miner. It doesn't take, it doesn't take $1 million. We're trying to make it accessible at $100. So join today. And if you want to buy your own S19 or S9, it's $140 right now online, and you can get it running. So that's why I'm in Bitcoin mining, is to make energy work for people, make computers work for people, and make it accessible to every single person in the world.
What was the line that you had to edit out in order to make it successful?
We added a line that said I could have bought 11 Lamborghinis, and instead of I bought $20 Bitcoin at this $70 a coin. Instead, if I would have saved the money, I could have bought 11 Lamborghinis or something. And that line just clicked like a song lyric. People just resonated with it, and then it blew up. And TikTok's an interesting platform where the amount of reach you can get if the video has high retention rate and a lot of interaction is insane. I've never seen it before. I posted a video, got 3 million views, the first video I ever posted. And my dad was like,
fuck.
he was like, yo, what's the video name? And I had my TikTok notifications turned off because my friends, I don't have any social media notifications turned on because it's such an interruption to your day-to-day life. So I pulled the app out after 3 days. I'm like, oh, I have 20,000 followers. What the hell happened? But it's just because you're catching the storyline. You're, as a content creator, someone who's created content for multiple years, I understand what's going to keep the viewer engaged, and then also have that taste that really makes good content, which is important.
That's incredible.
JP, why are you not also on Instagram so that I don't have to adhere to the CCPs?
I am on Instagram.
Are you what is the Instagram? Because I refuse to download.
Yeah, my Instagram is @John JOHN Paul Baric. The problem with Instagram and TikTok is the scammers. So I will never ask you for crypto. So if you're following me on social media right now, I will never DM you asking you for send me crypto. I will send you to the regulated crowdfunding page to put money in and be legit, but I'm not going to ask you for crypto. So people will copy my account, change the username, change the letter, and it's atrocious. I've had people message me I lost my life savings. I lost $10,000. I lost $5,000. And Facebook doesn't care. TikTok doesn't care. It's so sad.
Yeah, no, JP, this is actually an issue that both myself and our producer Chris go through. And I had a friend, so my roommate from college, who had a friend from back home who I met one fucking time in college, sent the scammer over 10 Bitcoin. And I'm just sitting there, I heard this story and I was like, fuck. Dude, the only way I heard the story was my old roommate in college literally calls me angry and is like, yo, dude, why the fuck are you helping my friend invest in crypto? Why wouldn't you offer to help me? I'm like, no, help anyone. I need to help myself first.
I really think there's a potential for a class action lawsuit there against Meta, but let's just leave it at that.
I don't know. Now we're deep down the rabbit hole, but I was so sad when, Zoom, as just a straight PR move, bought Keybase. I don't know if you've ever used Keybase, but it was a really, really effective messaging platform. It still exists. And it had, Git repository, Git hosting built into it. It's really fucking cool. Very secure. And one of the things that they did is, in order to authenticate your identity, you would post to your Twitter profile, your LinkedIn, your whatever you wanted to link to it. And that would basically, so it was the amalgamation of multiple accounts that were associated with you proved your identity. And it was basically impossible for people to spoof your account because it was super clear to anyone who would look at the account and be like, oh, this is just some random ass person. And it was so effective. And then Zoom, basically, when they got hacked during coronavirus, they just bought them and were like, now we're secure. And, of course, Zoom is a Chinese company, and they just started scraping all the data. And so it just lost its relevance. But I hope that, through, the block-based, Web 5.0 initiative, I hope that we get back to a world where there are effective social media platforms that offer a unique value prop that make it very, very difficult, if not impossible, for people to effectively scam. So
I hope
Social
so too.
media is a shit coin. Sorry.
I used to use Keybase as well. It was pretty good software.
yeah.
Everyone's homework assignment tonight is to go watch The Social Dilemma. Then you will understand why I'm so anti TikTok. Actually, that doesn't really explain it. TikTok is just a ploy by the Chinese government to spy on us. I said it.
I mean, that's a part of it.
You guys have
It's
seen
also,
the study.
it is also an extremely effective social media platform. Like, there's a reason that everybody's like, fuck, I hate TikTok, but also I am a TikTok influencer.
I mean, don't even get me started on that, but there have been a lot of reports coming out, and people have been doing research on like what are the top 10 trending things on TikTok in this jurisdiction versus like in America versus China is the example I'll always pull. And in the US, it's all these stupid dance whatever videos. And then in China, it's legitimately like complex math equations or like how to build stuff and like engineering tutorials. Like I'm telling you, it's literally designed to make you dumber. And there's all of this other stuff about how like all of these apps that like have this scroll down feature to refresh. It's just a slot machine. Oh, let me scroll down and then the refresh went and then boom, my new prizes. You're programmed to like these things.
Yeah, Twitter works the same way though. To Chris's point, our producer, he just put in the chat like, yeah, as opposed to American social media, like they're all trying to do the same thing. TikTok basically just figured out a better way to appeal to the current, ecosystem and generation. But
We're going down this rabbit hole too far.
yeah, 100%. JP, what are the Bitcoin mining related technological improvements or projects that you are most excited about right now? Or let me put it another way. Like what are the most exciting innovations in the space? Doesn't have to be like purely tech as it relates to mining.
I think it's, for me, water cooling. So water plate cooling of Bitcoin miners, where you put a metal backplate on the hash board and you run water against the back of the board instead of air cooling and instead of immersion. You have a lot less liquid and less parts. I think there's going to be, that's the Antminer S19 Hydros. They're seeing their hash rate they're getting on them. I think the new one's like 200 plus terahashes.
Holy shit.
So like I think that's the future.
That's super interesting. Q, what you got?
I got nothing left. I'm now so down deep this TikTok rabbit hole. I'm trying to find JP's videos because I did not discover you, JP, on TikTok. I just discovered you here on our conversation.
He's a killer.
JP, I want to give you the opportunity to maybe touch on anything that we didn't ask you that you wanted to highlight or bring up, or if you want to just poke fun at P, by all means, that's what we do on this show.
Come at me, bro.
Yeah. I mean, I think this was a really comprehensive conversation regarding energy and Bitcoin, so I appreciate it. I'd say, my Twitter is at JP Baric, Instagram at John Paul Baric, TikTok JP Baric. If if you're looking to get into mining and you want to put $100 in, check out WeFunder. BitVault is the name of the company. And then if you're looking to get into mining at closer to $50,000, email us at sales@miningspo.com. And we're happy to help you out, get you running out here in Iowa. But I appreciate it. This was a great time, guys.
Awesome. Thanks so much for joining us, man.
It's a pleasure having you, man.
Thank you, guys.
Before we cut to a commercial break, I do want to remind everyone that tickets for Bitcoin Amsterdam are on sale right now. Ticket prices will go up next Friday, so you snoozed and you lost. I believe the promo code BM Live will work for tickets for Bitcoin Amsterdam. If it doesn't, it'll start working next Friday after ticket prices go up, but these ticket prices are as cheap as they will ever be. Okay, so yeah, BM Live does not work for Bitcoin Amsterdam tickets, but ticket prices will go up, and then that discount will not be cheaper than what these ticket prices are now. So just do it. And then, of course, the print mag. It's available, censorship resistant issue. We're going to roll a commercial for it in a moment here, but if you haven't gotten it, you should. You're just dumb. I don't know how else to say it.
There are
Is
many
that okay?
reasons why a person may not have yet purchased this, the edition of our magazine that just came out, but it is a fantastic edition. It's my favorite one so far. You should check it out.
I mean, look, let's be probabilistic about this, and it's probably like a 45% chance that they're dumb, and then everything else is lower. So that's why just do it. It's a collector's item as well, but the articles and just the work that went into making this is not just like your random magazine that you buy on a flight before a flight and then leave it on the airplane and never think about it again. This is genuinely something that you will use, you will reference, you will go back and reread certain things. So highly, highly, highly recommend.
All right. We'll be back in a few minutes with Jimmy's song.
Those magazines that we burned, that wasn't real, right? Or did we really just burn 10 magazines?
I mean, I'm pretty sure we just burned 10 magazines.
Like, I've seen that 100 times, and honestly, I had the thought today. I was like, did we really burn just 10 brand new magazines? But welcome back. Thank you for sticking through the commercial break. Thank you for sticking through our interview with JP Baric, and we are joined by none other than the man himself, Jimmy Song. What is up, Jimmy?
Hey guys, good to see you. As always, P and Q. I don't know if you guys are aware of the elliptic curve used in Bitcoin. Are you guys aware of that? It is SEC
No.
P 256K1. Okay, that's SEC P 256K1. The complementary curve, not that many people know, to that curve is called the SEC Q 256K1.
What?
So one of you is P, the other is Q, and you're like kind of complements of each other.
Holy
I
shit.
think we need to change the name of the show to SEC-256K1.
Oh my fucking God. Yeah, you just changed my life.
That is
Yeah,
actually wild.
and if you actually want to know about the SEC Q curve, there's like a whole Bitcoin. I think it's called Blockchain Commons. That's what Christopher Allen's organization. But there's actually a use for the Q curve, and you can do all this other stuff with it. But the P curve is what we use in Bitcoin. Yeah. So P and Q. Just wanted to let you know that little bit of Bitcoin trivia for P and Q.
Incredible.
I love, Jimmy, that my entire life Q has been a forgotten letter. Like, I heard it all the time. And even still, for the SEC P 256K1 curve, somehow Q is the forgotten letter yet again. Love it.
I mean, P is the better letter.
Jimmy, how goes it, man? What's been on your mind a lot over the course of the last week since we spoke?
What's been on my mind? Well, I mean, it seems that I'm very good at pissing off altcoin founders for some reason.
No.
I don't know if you've seen, but yeah, there have been several tweets directed at me, calling me dumb or stupid or dishonest or something. Vitalik Buterin and Charles Hodgkinson are two of those people, and of course, I think Charles Hodgkinson like inherited the XRP army or bought them or something, because what I'm seeing is that there are way more Cardano trolls than I ever remember, and they're all like 50 follower accounts and they say exactly whatever he said in the reply. So it's like, okay, that's a good block list. So yeah, kind of fun. A little bit tedious because I have to go and individually block each one. I wish Twitter had like a way to select a bunch of tweets and then just say block and then put them all on your block list, but they don't have that. So what can you do?
So you got to go into more detail. Why does Vitalik hate you so much?
Well, so I wrote this tweet about proof of stake, and he quote tweeted me and just said, it's a complicated thing, and if somebody is making it out to be like a very, very simple issue, then they're probably wrong. So he didn't actually address my tweet at all. The tweet was, proof of stake doesn't solve the Byzantine generals problem. There's no way to get decentralized consensus based on that. That's Hodgkinson's tweet. So you can go look at the other one, which is Vitalik's tweet. He quote tweeted me. But and he was like, and he didn't address it at all. But basically I said it doesn't solve the Byzantine generals problem, because think about it. As a node, how are you supposed to know what the next block is, right? And with proof of work, it's easy. You just look for a block that has proof of work. You know that they committed enough energy to it to do it. You don't have to listen to anybody else on the network. If you just get that block and it does proof of work, you're good. With proof of stake, you can get multiple blocks that are valid, right? Because you can have a majority of signatures or 2/3 or whatever. You have no idea whether or not which block to follow. So what ends up happening is you end up following some central organization, which is exactly what Ethereum and Cardano do. And you end up, coming to consensus by way of centralization. And that was the point of my tweet. And of course, Vitalik does not address this at all. Instead, he says, if there's a long established tradition of people debating A versus B based on deep arguments touching on math, economics, and moral philosophy, then you come along saying B is done because of one line technicality involving definitions, you're probably wrong. So he doesn't actually address it at all. It's, hey, we've been arguing this about this for a long time, therefore you're wrong. It's the most disingenuous, scammy argument. And of course, Charles Hodgkinson, he just calls me stupid, as if that's an argument and not an ad hominem. So both these guys are experts at just sort of deflecting the technicals and saying, "Oh, okay, let's just call this guy stupid and see what happens." So I mean, in a way, it's par for the course, because this is what scammers do. They want to manipulate you emotionally so that you will believe them and not the critic. And that's always been the case. And whether or not that's through an ad hominem or whatever, but generally it's a rhetorical device. In the case of Vitalik, it's just not addressing the argument at all. It's just, hey, we've been arguing about this for a while. There's a corpus of literature. I mean, people have been saying exactly what I've been saying as my side of the argument for a long time. It's just that he doesn't want to address it, and he wants to pretend that there's a debate when there isn't. It's kind of like saying, there are flat earthers out there, and they've been debating it for a long time, and therefore it's not a settled thing. It's an idiotic and stupid and scammy argument. Same thing for Charles Hodgkinson, but I mean he's going even lower, because I guess the audience that he has is that sort of like he has a better reality distortion field or whatever, but. I mean, none of them addressed anything technical. It's just, oh, Jimmy, you're an idiot. And it's like, okay, well, I guess you're like the XRP army. And hopefully you disappear too during this bear market. I don't know.
Well, could we unpack, because we've now actually brought up the Byzantine generals problem multiple times on today's stream. And I am in no way qualified to try to really explain this to people. Jimmy P, do you two mind tackling, just explaining this out for smooth brain people?
The Byzantine generals problem. All right. So it's basically the problem of consensus. And The Byzantine generals problem is a little bit esoteric, but basically you have a bunch of generals that are surrounding a city, and as long as they have a coordinated plan, everything will be fine. As long as everybody agrees on what to do, then they will sack the city and win the battle. But if they're not coordinated, if even one of them is off, then it's an unsuccessful attack, right? So it's a problem of coordination. How do you coordinate? And the communication lines are weird, right? Like somebody might be a betrayer, but they don't want to reveal them. They'll still follow the orders that they're given, but they're secretly on the other side. They don't want to like reveal themselves as a spy or whatever. So you have this interesting game where you need some way to come to consensus among all of the generals so that you can attack the city and win. And it's if you don't coordinate, then you lose. So how do you come up with a plan with all of these generals? They don't have very good ways of communicating with each other, and the message may be changed in the middle at any time. And how do you do that? Well, the answer to that is proof of work. If you have proof of work, then you know whatever message you're sending has the proof of work within it, and you can verify the proof of work. So if somebody tries to change it, they have to put in a lot of work in order to change that thing. In which case, everybody else might also follow that. In which case, they'd still be coordinated, and it would be done anyway. So, so the generals would win. It's a coordination problem. Who do you listen to? How do you know that the information that you're getting is correct? And you could kind of see how this is related to Bitcoin, because that's the problem that every node faces is how do I know what the next block is and whether or not that's correct? If you're doing proof of stake, you're relying on other authorities to tell you, okay, this is what you're supposed to do. But with the Byzantine generals problem, that can be manipulated at any time. You might have multiple malicious signers that might want to fork the network or whatever. How do you know? Unless there's some sort of central coordination, which in the Byzantine generals problem that there's not allowed to be, then you can't do it with proof of stake. You can't just do it with signatures. You need you need proof of work in order to figure out, hey, I'm a node. I just want to know what the next block is. How do I know what the next block is? And if it's proof of stake, it's signed by X number of signatures. Well, there could be multiple blocks that are very different that have the correct number of signatures. How do I know which one to go with? And that's where like proof of stake just doesn't work. It doesn't solve this problem. You can't coordinate and have everybody be on the same page. In the case of Bitcoin, like as a ledger, figuratively speaking, that's exactly what you want to do. Is you want to progress the blockchain and have a consistent database with everybody following the same exact chain, basically. But with proof of stake, you can fork very easily unless you have a centralized controller that tells you, okay, you have to do it this way, or else we're going to take away the stake from you. And that's basically how they enforce it, which is completely centralized. It doesn't solve anything. And if you're going to do that, you might as well just make it a centralized database, but they want to keep the decentralized and name only stuff. So that's what they do. And that's the essence of the Byzantine generals problem. I don't know if I've explained it enough so that you guys have a general idea of what's going on.
I mean, it sounds to me like just Order 66 from Star Wars, where, spoiler alert, all of the, oh my God, I can't think of what the clones turned on all the Jedis and killed them. That only works if all the clones turn and kill all the Jedi. So they didn't. But on the proof of stake comment, and Chris, if you can pull up the back forth with Charles Hoskinson, you bring up something that very recently happened in Solana, where if you didn't vote with the way that the powers that be wanted you to, your hand was forced, and all of a sudden the whale's account was completely shut down. Talk to us about like how is that even? First, how is it possible? B, how do people still believe this is DeFi?
Yeah, I mean, with proof of stake, you basically have to rely on the goodwill of the people doing the signing, the stakers, if you will, and you're depending on them to be honest and sign the right thing. But how do you know what the right thing is? Like everybody has a different mempool or whatever. And essentially what they do is they give you the software that you should run, and it does exactly what they want it to do. So ultimately it becomes a completely centralized farce. And if you try to do anything else, then they just take your money away. That's how it works, is whatever you have staked, that you give up if you don't sign exactly the way they want you to. Now, this is the ultimate in decentralized and name only, right? Like, you guys, it's based on a vote of 12 different people, but they have to vote exactly the way we want. So it's theater all the way around. And like, I get it. Like, this, if this truth got out and like people actually understood it, then they would be like, why the hell am I doing this? But they want to fud this thing to death, so they just call me stupid or something. I guess that's the best argument that they had. But this is exactly how proof of stake works, or at least the mechanism in Ethereum, Cardano, and Solana, as far as I know. There's so many other proof of stake things as well. So who knows how many of them are, how many of them have that kind of penalty, and what other stuff that they use. But it just simply does not work. It doesn't solve decentralized coordination. You don't like, as a node, you're supposed to get data from all over the place, and you're not supposed to trust the data unless you can verify it. And signatures, you can verify signatures, of course, but they cost nothing. So the person doing the signing can lie to you just as much as anybody else. With proof of work, it's just, okay, they put in the work, and that's your proof. Instead of relying on somebody's will, you rely on somebody's willingness to input energy, and that ultimately ends up being far more robust and actually decentralized.
So maybe we can address, I don't really care to really address that. I'd rather instead, JB, like, what are Byzantine General's problem, staking, and the fact that it's not decentralized? What are some other just broader issues or lies that are perpetuated in the crypto space that we can debunk right here and now, just off the top of your head?
Well, maybe we could go back to the article that I wrote like 10 days ago and released on Bitcoin Magazine. But it's this problem of fiat knowledge, right? And most people depend on experts or authorities to tell them what to believe instead of actually verifying things for themselves. And every altcoin encourages this. And you can kind of see it with the Hodgkinson, Vitalik stuff. They're all just sort of like cheering for their team, pretending this is like an NFL game or something like that. And that's how people act on Twitter instead of actually going and finding out the truth. In Bitcoin, we encourage people to verify, not trust, and you get the knowledge directly. So something like the Byzantine Generals problem, I'm trying to show you the work, right? Like, here is what that problem is, and here's how proof of work solves it. And if you understand all of that terminology and really dig deep into it, you get it. Okay, it's decentralized consensus. Proof of stake doesn't do that. And we could call it something else, but it's not decentralized. And that's something that you can verify yourself by going in and learning yourself. Instead, what most people do is they want to take shortcuts. They're lazy or something. So they will just go and read whatever the authorities tell them. It's like, I only trust stuff from Huffington Post, or I only trust stuff from Fox News. It's idiotic. That's not the way you're supposed to learn stuff. You're supposed to actually go and verify whatever, because the people, the authorities that tell you this stuff, they know you're depending on them, and they abuse that to the nth degree, and they make you do stuff idiotic. And even if you know better, a lot of doctors during COVID, for example, like, did just refuse to speak up, even though they knew that what the CDC was saying was stupid. But they refused to speak up because they knew that like, going against the authorities narrative would have a lot of consequences. And this is where fiat knowledge is very dangerous, because it forces this sort of like conformity. And you can see it in all these altcoins. And quite frankly, some Bitcoiners honestly could use another level of verification, right? Like to learn like another level of stuff so that you really understand what the heck is going on and you can articulate those arguments to altcoiners because they don't understand anything about their currency. I guarantee you, they don't understand anything. And the best argument that they'll give is you're stupid or you don't understand it. And you ask them if they understand it and they say they do, but they actually don't. This is the weird, stupid game that we're playing because nobody wants to do the hard work of actually learning this stuff. The only people that do are the altcoin founders, and they know they're bullshitting, and they can kind of get away with it because what most people do is they go, oh, well, truth is probably somewhere in between. I'm too lazy to actually go and verify stuff, so I'll just go with this in between moderate position, and that'll be safe. That's not safe. Not when it comes to truth. Not when it comes to money. You can be like, okay, well, maybe flat earthers have a point, and I need to, hedge my position by being half flat earther. That's idiotic. It doesn't work that way. And unfortunately, that's what a lot of people in altcoins are. It's okay. I own some Bitcoin, but I don't know any of this stuff, and I don't want to actually go learn. So I'm gonna, this is the problem of fiat knowledge, and we've been sort of like made to like sort of accept knowledge in this way rather than actually go verify things for ourselves. It's the fiat sheet mentality that we all grow up with in school, and this is really, really sad.
How much of this, though, is rooted not so much in like our modern day systems, but rather just human psychology and biases, where if I believe this and someone says something that further strengthens my argument, I'm going to believe that their argument is truthful, versus if someone is saying something that I don't agree with, I'm just instinctively going to be like, oh, they're dumb, they're wrong. Like, to be honest, I'm just going to call it out. Literally right now, what's happening in our Rumble chat, Rocore,
Mm-hmm.
Jimmy is just saying things that you don't like, and now you're just saying, well, he's wrong, dumb, and stupid, instead of pausing and thinking these things through for yourself. I'm not saying agree with what Jimmy is saying. I'm just saying pause and think that maybe his perspective, which is vastly different than yours, may be right, and maybe there are things for you to unlock. How much of it is just human psychology?
A lot of it is, but we're definitely sort of like taught that is good. And if you look through like historical writings and think about virtue and all of this other stuff, the whole point of school, right? Like some say like Socrates was like the first one to have any kind of school. He kind of invented school in that way. The whole idea was to learn things from first principles and figure out what is true rather than here's this whole set of stuff that you should just swallow without questioning anything or learning whatever. That's unfortunately what fiat education has become, is here's what we want you to spit back at us when we ask these questions, instead of let's explore, think, start from first principles and go out and figure out what's actually true. And that's real knowledge as opposed to fiat knowledge. Unfortunately, most people are inundated with fiat knowledge, and they think that's actually good. That it's a virtue to have fiat knowledge. To think that you need to double mask outdoors for everyone's safety and not kill grandma. It's idiotic if you think from first principles. Okay, first of all, you're outdoors, and you're double masking. How many old people do you see every day? Very few, if any. Like it's stuff like that just people refuse to think about, and I get it. Like there's a certain comfort in thinking that your narrative is correct, and that okay, I swallowed this ideology whole hog, and there's comfort in that because you have all the answers sort of already there. With real knowledge, you have to deal with a lot of uncertainty and a lot of I don't knows, and I'm not sure how that works or what I don't know how that. It's a lot more humbling, and it doesn't let you be in this sort of like knowledge high ground or something like that, where, oh, I know what's right and I'm in this ivory tower, or I'm not in the ivory tower, but the ivory tower guy says that you're wrong, and therefore you're wrong and you're an idiot. Ha 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 ha. I get to pretend to be superior to you. That's unfortunately like the thing that a lot of people indulge in, is thinking that they're smart because they know something that they've been told, rather than verifying something that they've actually thought about. You'd be a lot more humble about something if you actually had to go and verify actual truths. And that's hard work. And most people just don't want to do it. They'd rather have the comfort of fiat knowledge, which lets them live in this sort of like aura of superiority, and thinking that they know more stuff than other people, and that because they're on the right team, that they're somehow winners. Um, Actually, you're the lowest of the slaves, because you can be manipulated at any point for any reason, just by the authority telling you so. And unfortunately, we've seen that way too often, especially in the political sphere. And it's sad. I think it's what I find particularly interesting, and this is sort of veering off in a digression a little bit, is in politics. Oftentimes, what you see is people that are way on the left or way on the right. Right? They swap. Right? At some point, they become disillusioned, and then they go all the way on the other side, and they have the exact same behavior. They attack the other side in exactly the same way, and they swallow sort of truths the same exact way. They haven't changed their minds per se. They just chose a different master, right? Like, to actually really change your mind is to go and verify things for yourself, and to go and learn something for yourself. And unfortunately, not too many people are willing to do that. Very few people actually, go learn things from first principles, for example. And that's to our detriment, and that's probably a large part of why we've made so little scientific progress in many ways. So yeah, that's my rant about fiat knowledge and how it hurts everybody. So yeah, and of course, dunking on altcoiners as a side effect.
Well, how much of this though is rooted around, and not to piggyback off of another article you wrote, but just like the fiat education system, where in my personal experience, having gone to public school from the second grade until my senior year of high school, my public school education and my private school education was different. And I felt like I was given a very different incentive structure, where in public school I was genuinely, let me just memorize everything for tomorrow and then I'm done, versus having to have like these thoughtful analyses and thoughtful procedures to really learn the steps to build something out in both college, as well as like I still remember like little things from first grade in private school where I'm like, that was more helpful 30 years, or I'm not, 20 years later, 25 years later, than learning my times table was in the third grade. Mind you, I'm the weird person who's like still uses high school level algebra in my day-to-day life because I just like math like that. So like, how much of this is the public education system?
Oh, it's an enormous part of it, and they're very good at inculcating that, because the public education system churns out people that are very compliant to authority, and fiat knowledge is a part of that compliance. It's accept these truths as we say them, not as something that you've discovered on your own, self-evident, if you will. And that's unfortunately what the powers that be want, because that makes for a population that's less likely to revolt or have revolution or whatever. I mean, if people knew how money actually worked, Henry Ford said that there'd be a revolution tomorrow. They don't, which is why they continue to be ignorant about money and economics and all of the other things around the economy, which are manipulated to death. We're purposefully kept in the dark about certain things. As are a lot of altcoiners, right? They're kept in the dark about proof of stake or centralization points, or how these founders pre-mined and printed a whole bunch of tokens for themselves and their VC friends. They don't want anybody to know about that. And in the case of something like even BSV, they keep themselves in the dark. CSW's origins or his scammy past and all this other stuff. It's a very strange kind of like almost self-deception. I think in 1984 this would be called doublethink. Like, here's the official narrative that I believe that you have to believe, but the actual truth is something else, and you're going to keep that in the back of your mind for engineering calculations or something like that. But for the sake of public disclosure, this is what you always say, something like that. And that's unfortunately something that a lot of people are taught, and this is a sad part of the communication today. So much of it is bureaucratic. So much of it is box checking. I mean, what were your tests in high school, in public high school, other than box checking? It's preparing you to become a rent seeker. It's literally, okay, did you get this answer correct? And it's all multiple choice or whatever, and it's all memorization. And if you did things properly, you got an A. If you didn't, then you got a C or whatever. I mean, this is how it all works. This is the world that they want to build, one where everyone is compliant to authority, and it's way more socialist. I keep saying this, it's way more socialist than we think. Kind of live in a socialist place, whether we like it or not.
I mean, look, we live in a socialist country. It's social capitalism in a nutshell. I'll even expand on your point. Like, college assessment tests like the SAT or the ACT are multiple choice. And based on these multiple choice tests, I recently found out that my ACT scores actually beat out President Barack Obama. So that's how smart I am.
Nice.
It's all a joke. It truly was like, just cram as much. Like, it's a joke, and it frustrates me a little bit because we don't seem to have a viable solution. Although any legislator that wants to talk to me about what I actually want to do with the entire public education system, brilliant idea, slide in my DMs, like, let's change the world. But until that moment happens, this is sort of the situation at hand. So how do we convince people to do something else? How do we convince them to look at it through a different lens? Or is this an unfortunate byproduct of this entire ecosystem and system that we live in?
Yeah. And this whole system is just so corrupt and fiat. I mean, that fiat is like a word that I keep using, but to describe all this stuff. I mean, let's just remember where it comes from. Fiat is let there be in Latin. And the reason why we say fiat money is because let there be money. That's essentially what every central bank does. Let there be money. And they create money out of nothing. And it's become sort of like an adjective as a result, even though it's really a verb in Latin. But it describes the authority, right? Like them sort of creating reality for you. And that's what fiat knowledge is. It's reality created so that you will be compliant to everything that they want you to believe, rather than the reality as it exists. And those two things are oftentimes very different. Sometimes they're the same, but oftentimes they're very different because it is to the advantage of those that tell you this stuff. So, knowing all of that, you should be very careful and learn all of this stuff and verify and not trust what the authorities tell you. And go from first principles. And, I know this is hard work, but anytime people get engaged in this hard work of verifying stuff, they find new stuff and they come up with new ways of thinking about stuff. This is how discovery happens, and this was the explosion of science. A lot of people think, oh, science is opposed to religion or whatever. Actually, science came out of the Christian church, and it was a large part of why they were doing that. It was because they wanted to learn reality from first principles, and it's that's something that you can do as well, right? Like learn stuff from first principles. That's how knowledge expands. And that's how new discoveries are made and so on. Instead, we have lots of fiat knowledge. I mean, currently, I wrote that whole article about fiat science, how that's gone completely awry, and it's just sort of made up stuff that no one can disprove. That they're all sort of like circle jerking to. It's completely it's completely inane at this point. And that's something that I hope with Bitcoin, when as people learn to verify and not trust, that they start changing their mentality towards it, and learning things from first principles and not being lazy and just oh, what's the popular opinion? Okay, I'll adopt that as my opinion because I want to be cool that way or whatever. That's the exact wrong way to arrive at truth. Unfortunately, that's the human tendency, and that's way too common. And this is why obviously wrong things in history became popular, because people would rather be with the majority than tell the truth and get martyred or something. This is the fate of every prophet, right? Is they tell the truth, but they're the only ones that tell the truth, and they get martyred or killed for it. Now, fortunately, that isn't happening as much today. But you can see that sort of stuff online where people get angry at you for saying something that is again, sort of against their reality, and they don't like it. Yeah, so this is my admonition to everyone to level up, learn things from first principles, and verify things yourself. Don't trust me. Don't trust P. Don't trust Q. Don't trust Bitcoin Magazine. Trust what you can verify on your own. And if you're not confident about that, go learn and learn to be confident. This is something that is well worth your time, because all the people that actually make a difference learn this stuff, right? Like that if you want to make a positive impact, this is almost prerequisite.
So one of the things that I wanted to ask you about, we were talking about this earlier to shift topics, but the Celsius and Voyager filings for bankruptcy. So we were talking about it earlier and discussing how this is an attempt to basically take control of the assets that their customers have deposited in their accounts. And I was curious if you had any thoughts about that specifically, if you'd done any research on it, if you'd heard anything around that, because basically the claim was that they should be not doing that. They should be going through the kind of standard SPIC process, which would allow their customers to retain control essentially of their assets.
Yeah, the thing is, like, customers are usually like the last in line at these things. The VCs and the investors, they're the ones that poured in way more money, so they're going to have a lot more pull. Customers are sort of like the mob on the outside, but you're bankrupt anyways, and I mean, what can they do to you at a certain point? But the VCs, they can hurt you, right? Like if you try anything else in the future, you're pretty much blacklisted from all of their investments and stuff like that. So it can be very difficult. So from the founder's perspective of these places, they want to satisfy their creditors first rather than the depositors. And I suspect that's the dynamic at play. They'll give lip service to the customers, but really they need to satisfy the people that are in power. And this is exactly how things work in Washington too, right? Like they give lip service to all the voters, but really you have to satisfy the people that actually have the power, and it's concentrated power. And this unfortunately is how centralized things work. And yeah, there are lots of depositors that are probably going to get sued, but hey, not your keys, not your coins. You learned your lesson. Go use it for good rather than just being bitter about it or whatever. We knew that these people are immoral, and I mean, they're kind of showing it, right? Like, and this is every single one of these people in the altcoin space. I saw some of them, I guess, maybe have pure motives and don't know necessarily that they're complete scammers. But vast majority of them know what they're doing, and they've harbored these doubts, and maybe they're pushing them back down. They're double thinking their way out of it or whatever. But this is par for the course.
Got it. Q, what do you think? Do you have any other thoughts, questions, rants for Jimmy Song, or should we call it a day?
I mean, I'm kind of curious if are you in the camp that believes that things like, these shit coins and every single attempt to essentially get people to send someone else their Bitcoin, are these attacks or these attempts going to stop, or will they just continue to perpetuate into the next cycle and cycles beyond?
Yeah, so this is taking advantage of people being so compliant, right, and trusting. They like to trust. They don't verify. So if you have a scammer that's asking for their funds, they think, oh, okay, well, maybe I should trust this person. And this is the sort of hack on the compliance to authorities that we've been inculcated with since we were little. Um, you know, these scams work because the fiat system exists. Until it's completely abolished and people learn things from first principles, this isn't going to change. And um, hopefully that starts changing as Bitcoin becomes a lot more mainstream and more people adopt it. But in the meantime, you have billions of very fiat educated people with fiat knowledge and a compliance to authority. So anyone that acts like an authority tends to get a pretty good following. I mean, this is what every altcoin is, isn't it? Right? There's a reason why Vitalik has over 1 million followers and Hodgkinson has like 900,000. They act as if they're from authority, and they speak with a confidence to get their followers to be compliant to them. And they've successfully hacked into the fiat knowledge system for their own benefit. And Bitcoin is very different in that regard. We expect everyone to verify and not trust. Don't trust, right? Like, just go verify things for yourself. And you're not going to be given like a whole bunch of things that you have to swallow and believe. It's just, you have to go verify stuff for yourself. And it is very tempting to go to an altcoin and find all the comfort of having an ideology that's more or less laid out for you, and all of the thinking that you don't have to do. Thinking is hard, and it's going to hurt a little bit because you have to put in the time and effort to understand it all. But once you do, it's yours. It's like really yours. It's you actually possess that knowledge instead of borrowing from some Ivy League tower. What you're supposed to believe. And that's a much better thing to have. And unfortunately, these scams work because people are so used to doing that.
I love Chris's comment: the legacy banks are the legacy scammers.
So true.
Jimmy, I want to give you just sort of the final word before we dive into the bottom of your song sheet for the week, and I give you my favorite signs you're becoming a Bitcoin maximalist.
Well, I've been thinking about like how meaningless a lot of people's lives feel like these days, and that's probably the next that is the next article that I'm going to write about. But it's rather sad, isn't it, that so many people strive for so little? They just want like a promotion or an extra $100 a week or $1,000 a week or something like that, and like that's what they work their whole lives for, to make partner at a firm or something like that. What happened to our dreams, right? What happened to trying to live your best life and make a difference? And it's rather sad to me that so many people have lost those dreams of trying to make an impact and making a mark on the world based on the unique gifts and talents that you might have. And I think that Bitcoin is that hope, is that uh, it gives you space to think about those things. Because if you are living in a fiat society, whether you're in debt or not. If you're in debt, then you're concerned with servicing that debt. If you have savings, then you're concerned with keeping your savings, and it just keeps you so busy that you don't have room to think about what you want to do, your purpose, your meaning in life, to do something with the freedom. Because in a sense, fiat shackles you to money, whether you have debt or savings. Whereas with Bitcoin, you're sort of free from that concern of money because you have savings. Once you've saved up a couple of years worth of income in Bitcoin, you don't have to worry about it because it'll still be there. And no one can take it away from you. And that gives you room to think. And so thinking about that next step, about what you actually want to accomplish in life, I think that's an important question that all of us will have to wrestle with as we sort of mature as a community. What impact do you personally want to have on the world? And how are you going to get there? Because if you're working a fiat job, that's going to be near impossible to even think about. The goals that you're going to accomplish are based on whatever fiat company that you're working for, or whatever career that you've chosen. It's whatever the top of that profession is, which honestly isn't that meaningful. Is it that meaningful to be the Super Bowl MVP? I mean, I guess in some sense it is, but in another sense, the impact that you're making, not really. How about partner at a major law firm? Not really. Even president of the United States? Not really. I mean, like all of these things are sort of like you have to make all of these compromises along the way, and have to have all of this luck happen so that you can get into that position. Right. And we're not thinking in terms of what impact we can make with the unique talents that we have, because there are certain people that are very good at playing football, but you're probably not one of them, right? So what is it that you are uniquely situated to do, and how can you make an impact with the talents that you have? And that's something that I'm thinking about, I'm trying to write about, and hopefully will write about and have something out there for all of you on Monday.
Beautiful
Fantastic.
word. I will just leave you with this one that made me chuckle, but you get, actually, you know what? I'll do the one above it because it feeds off of what you just said. But 10 signs you're becoming a Bitcoin maximalist. Number 7 was, when you have free time, you spend it on improving yourself. Sound mind, sound body. P, which one's yours?
Honestly, that was my favorite one as well. You fucking stole it from me, you bastard. I think it's super important. If you don't have your health, you don't have anything. And it's all too easy in this day and age to neglect one's physical and mental faculties in favor of just sort of being in this morass of stimulation. And it takes effort and it takes diligence. And all of us struggle with it at different times, but it's super important.
Indeed it is. Yeah, but that's I'm glad. I don't know if this one was as funny as I wanted it to be, but hopefully you guys can be gracious and read it anyway.
Absolutely. All right. Well, on that note, I want to remind everyone that Bitcoin Amsterdam tickets are on sale. They go up in price in the very near future. If you have not already got a ticket, go check it out. It's going to be an amazing conference. Q and I will be there. It's going to be fantastic. Also, the censorship-resistant issue of the magazine is out now. It is the best edition of the magazine we've produced so far. Incredible articles and super high-quality content, investigative journalism, good stuff all around. We will see you tomorrow. Here, same time, same place. That's all we got. Peace.